So good morning, everyone. We're just gathering few more participants. Maybe we'll just wait for 1 minute or two, and then we'll start off with today's agenda. Thank you.
Hello, sir.
Morning, Hemant.
Good morning. Have you made a co-host to today's speaker?
I'll just make that. Yeah.
Okay. So, shall we start the meeting?
Yeah, I think we can, Hemant. It's 10:35 anyway.
So, good morning to all of you. Can you hear me properly? No?
Yes, Hemant.
Yes, sir. We are able to hear. Yeah.
Okay. I think this device is not working. Anyhow, good morning to all of you. A very warm welcome to all participants. Myself, Eminent Panel, think tank multidisciplinary global platform, welcomes you all to this think tank global conclave for India growth story and meet the expert series. It is covering in details the management think tank, valuation think tank, IBC think tank, RERA think tank, capital market think tank, and we have also launched a newsletter called as think tank at the rate Vivek Patra. Vivek in Sanskrit means knowledge and wisdom. Patra is an innovative newsletter updates containing all the updates containing slides on on sharing latest development and real life examples by CEO, CXO, CFO, specialist, and professional with a global experience. Today we have think tank multidisciplinary global platform special meeting for all stakeholders in finance, corporate affairs, industry and professions. Think tank has become in existence since a decade, over a decade. Idea conceived somewhere on 6th of January 1991 to have the conclaves and conferences with CEO, CXO, CFO, panelists and specialists sharing experiences and real-life examples. Our panelists are financial leaders working in reputed companies or profession since many years and have deep domain knowledge. Intent platform now is a digital and has got overwhelming response globally on digital mediums and expanding rapidly through LinkedIn, Facebook, etc. Our participants and experts have rich experience in industry and professions who have done CPA, CFA, CA, CS, CMA, ISA, CFP, IIM, IFRS, BTech, Master Degree, PhD, like all these kind of professional degrees, and sharing experience. We are reachable at www.thinktank.co.in. You can visit our website. Due to overwhelming response to our annual report, corporate strategy, and ESG, we have announced 6P awards. 6P awards and recognitions. 6P stands for people, planet, promoters, and platforms. It is for corporates annual report analyst, professional achievers, CEO, CXO, CFO, with a very respected jury, which has experience in interaction with stakeholders and boards. These recognition and awards would be given and announced with a rigorous process of scrutiny and choice and interaction with the participant. As participant, you are aware, recently we have launched a much awaited referencer, approximately titled as Think Tank @ Patra, India Growth Story. A comprehensive conference material compilation over 600 pages, sharing experiences by CEO, CXO, CFO, specialist with latest development and series on blocking regulatory fraud, financial reporting, IndAS, IBC taxation, digital capital market, technical analysis, ISA, bank audit, corporate affairs. It would be available for subscription and for any critical contribution by well-wishers. We will be also covering important and latest development as suggested by many participants in topics, example valuation and financial modeling, as wealth, cybersecurity, blockchain, MSME, latest regulations and development in various important and profitable bodies and institutions, etc. We request all to subscribe to Think Tank YouTube channel by watching summits, conclaves, webinars, and joint connect and network on Think Tank, a webinars group on LinkedIn and Facebook pages, Telegram channels, specially created on suggestion of many participants and panelists. We once again welcome you all members and panels members, and I especially thank to my colleagues in the global team, Anupam, Aditya, Ajay, Anurag, Archana, Ashwari, Dushyant, Mitesh, Mihir, Malvika, Manish, Nipun, Pramod, Praveen, Santosh, Subrat, Snehal, Sandeep, Sujit, Unmesh, Vijay, Vikas, Vikram, Yogesh, and others for regularly contributing to Think Tank. Today we have an excellent Think Tank multidisciplinary platform seminar, eminent stalwarts and specialists sharing experiences and latest developments. Let us have an interactive event. And with this word, I hand it over to Manojji for introducing today's panel leaders. Manojji, over to you.
Thank you very much, Hemant Bhai. It's indeed a delight for me to be with you today at this special conclave. good to see so many experts and stalwarts interacting on vital issues. I would particularly acknowledge Mr. Sanjeev Chaudhary. He is with us here today. Sanjeev, eminent professional, the first Indian to be on ISBA, international body, part of IFAC in New York. Really wonderful, rich experience in profession and experience as a central council member also. Indian on an international board, first Indian. It's really honor for everybody. So many topics lined up. Sustainability, we were the first to start. In fact, offline over a decade ago when ESG just started. And now a special series on sustainability, ESG, a special presentation, a series which will be presented every month in a lineup to the special theme suggested by international professionals for this event in November. In fact, they said, why just have just rebuilding as a theme? Sustainability is a buzzword globally. And incidentally, this week is a week of action, lots of actions. We have seen in the media so many developments on corporates. So many results are coming. Not only that, the financial authority, National Financial Regulatory Authority, NFRA, is in action, serious action. Very important orders have come on 21st of June and 22nd of June, as is known and expected by everybody. The series Meet the Experts is a wisdom series, is always the first to take up in a couple of days, and they have risen up, and so many experts, Nilanjan, Ramaprasad, Harsh, Umesh, so many are joining in, Sanjeev, to interact and share their views. And just recently, a couple of days back, there was a request to share the thoughts on the latest curriculum. Hemant bhai, you were the one to suggest we must take views on the latest curriculum and training also. So many experts would share their views. I request Archana Moge, who is an eminent professional and a banker, and who has been also on various committees, international relations, and on accounts and audit. She'll be the moderator for the event, and Nilesh and Nilanjan would request he would be supporting, so that we have excellent lineup and sharing deep knowledge and experiences on each of the topics planned, and to have a wonderful open house and interaction. I request Archana to take over and Sanjeev Chaudhary to share a few thoughts before we begin our presentations. Archana? Archana, you are there?
You're on mute, Archana.
Yes, Sanjeev ji, you can continue, please.
No, Archana was on mute. She's saying something.
Yeah. No, what I was saying is, welcome Sanjeev ji, and request you to share your views on Prabhu Steel and things lined up for today.
So thank you very much, Archana, and many thanks, Manojji, for your kind words. I think, so first of all, being on ISBA actually is a responsibility of sharing and understanding what is happening internationally. It's a process where I think one is paying back to the profession whatever one has gained, one has gained little bit of knowledge or experience in the last 40 odd years. I think 2 or 3 things which I want to point out. I think a lot of us actually have heard, and in the recent times also, criticizing the international code. And I think to an extent criticizing our code also, to say that why should we follow international? We are a country, we are a large country, we are a second largest accounting body in the world. I think we failed to remember that our 2009 code also was based on the international code of 2005. So it is not now that we have looked at the international code. I think it has been a part and parcel of our 2009 code also. That's point number 1. Second, I think we need to remember the fact that our council is supreme. You can reject that code entirely to say, well, we'll have our own code. We'll converge it to say that we'll take up the best practices from there, modify them to what we need. So, for example, our Companies Act has restrictions on rotation of audits, which is not there internationally. So our code actually takes that into account. So I think it is wrong for us to, or anyone to say that, why should we follow international? We are not following it. It is up to us in the council in India to follow, accept, reject, modify, amend, do whatever to the code. I think the benefit of the international code is that it is debated at length. And I think it gives you a framework which you can follow if you think that is the right framework to follow. So there's nothing like, I heard someone last week saying we should scrap the new code. And I was about to say, please scrap it. In any case, we are not following it. So if you look at the 3 important provisions, and that is what bothers me a lot, which were introduced in the code, have been deferred from 2019 till October 2022, which is the current October, which is almost 3 years. So I just take, a minute more on one provision. I'll not go into NOCLAR and, the tax services. If you have to look at the independence of the auditor, should fees be a criteria from one client? I think the answer should be yes, that I can't be dependent on one client from whom I'm getting a substantial amount of fees and I still provide audit services to that client. Is my independence not impacted? I think yes, it is. What should be the quantum of fees? Should it be 15%? Should it be 25%? Should it be 40% of my revenues? I believe that we should have whatever the council wants. So I'm not saying it should be 25, 30, 40, whatever the council wants. But you cannot have a situation today that our earlier guidelines have been repealed in 2019. New guidelines have been deferred. So there is nothing in place for the last 3 years. And then we get up and say that, we are not respected by the regulators. I think everyone is watching us, and I think we are going through a very difficult phase, be it NFRA, be it ICAI, be it MCA, be it SFIU. I think everyone is unfortunately breathing down our neck much more than they should. I think any fraud, I always say, if there is a fraud or a suspected fraud, you should look at the management first and not who's the auditor first. What did the management do? What did the CFO did who is there on the other side? The auditor comes much later. I'm not saying auditor is not responsible for certain acts, omissions, etc., etc. But I think the reaction is, you see a fraud and you say, well, who's the auditor? You see a problem and you say, who's the auditor or who's the chartered accountant? I think that has to change. And just last point, on these 2 orders which have come, I think if I look at the first order, it speaks volumes of our upskilling or our knowledge of what needs to be done. The chartered accountant in practice has accepted his responsibility, that he has failed in his responsibility. But he's saying, well, the management has failed and management takes the responsibility. I mean, can you imagine that someone who audits the accounts of a listed entity doesn't even know what standards have to be followed? I can understand a problem in one part of the standard or not following a particular paragraph of standard. But to say that IndAS has not been followed for a listed entity and he says it is the management who's responsible, I think management is, but I can't shirk away my responsibility. I mean, if you look at the order, which is a 28-page order, CFS has not been given, IndAS has not been followed, etc., etc. And on the second order, I'll not talk much because it is a very detailed order, except one thing. We've had two orders before, one on Deloitte's and one on BSR. And one point which I've been fighting with the institute, where I have not got a response till date in the last 1.5 to 2 years, is that what is the definition of management services? What services can I provide? And the question is every service to a management is a management service? Is there a difference between management services and management responsibility, which is very critical to understand and appreciate? And as long as I'm not doing management responsibility, our code very clearly differentiates between what can be done and what cannot be done. NFRA has taken a different view on these services. We have been taking a different view in the last 50, 60 years of our profession. I think each member today looks at the institute to say, what should I do on the way forward at least? Please guide me. And that guidance is not coming. The guidance is not coming from MCA is different, but the guidance is not coming from the institute also, which is a bigger problem for me. So what should I do? Can I provide tech services? Can I do XY services? Which I've been providing for times immemorial. But today, if NFRA believes otherwise, what is it that a member is supposed to do? It has to be prospective. It can't be retrospective. But there has to be a guidance. And I think that's where probably the other speakers can address. Happy to listen to colleagues, and I'll try and contribute wherever I can, Manoj. I'm away from the audit function for many years. I've been more a tax person in the last 20 odd years. But being in the council has helped me a lot in understanding some nuances of the standards. Nilanjan used to help me a lot when I used to perform that work as a colleague and as a friend. So happy to be a part of this group and happy to learn and contribute wherever I can. Thank you very much.
Manoj ji would like to have some points. Shall I? Hello? Manoj ji? Yeah, madam, shall I just take 1 minute?
Do you want to take it now, or we can take after Nilanjan's?
Just 1 minute. One minute, and then
okay.
we'll. Yeah.
Okay. Just 1 minute. Huh? Just 1 minute. Yeah.
Welcome to all of you. Sanjeev ji, with due respect to your comments, I really appreciate the thought process. But 1 or 2 points I would just like to take one. Are we really independent auditors? Because our act itself says that management should appoint the auditors. Why not the third party appointment? We itself has the lacuna in our law itself that the appointment of an auditor of a company has been done by the management, who itself is interested, management itself is interested, and they do the appointment with their own choice. So where is the independence of that? That is the first point. Secondly, the ISBA, yes, I think this practice has been followed since many years, that we are rather importing certain things, making the small changes in it. But the ground realities of the CA profession in India and CA profession in UK or maybe other countries are quite different. I am not arguing that it should be scrapped or something like that. But why not to create our own ethics, which are already been followed in years together or in centuries by our forefathers? Not only this time, the Arthashastra Kautilya, since if you go in that history, even all here where the ethical standards are very high. Rather, we are the teachers to the nation at the world at large. The high levels of standards, ethics of one followed by the India or the previous followers from our profession or from the centuries. So why not to design our own standards which are suitable to the country and which are definitely in parallel with the international standards? Because if you see the presently certain standards, the different, no clerk is different or certain things are different. But what about our ground lead is 85% are the SMPs who are practicing in India. Only 10 or 20% practitioners are doing the large corporate practice or audits of the listed companies. And when the standards are designed, creating as a profession as a whole, it has created a lot of issues for SMP. The sustainability issue of the SMPs is really faced by the SMPs. And they are really, as you said, for centuries together, we are doing the taxation services for our members. Are we not ethically doing that for many years? why the frauds have been seen more in last couple of 10 to 20 years. It is not only that we are giving the taxation services from 1961 onwards when the Income Tax Act came into existence. Along with that, our audit services were there. Same auditor was giving the taxation services also. Was that not the issue? But why it is there? See, there is a difference. There is a change. It is no doubt. We need to see the standards has to be there. But what standards? What ethical standards? I think I have even written many articles and been represented on these issues, the 5%, 15% issue, maybe no clerk issue. Are you really going to whistleblower? You will be sacked in the next day. You will never be an auditor of that company when you take a position of whistleblower. Let it be a small company or big company. It is really a difficult situation when you show any non-compliances or even report, and that to report to third party. I think there are certain issues. It is a different story as far as the foreign countries are concerned. The UK or US is concerned. The Indian things, the ground realities are quite different. Council is supreme, but council has to understand it is not just co-option, adoption, or directly importing ISBA's standards over here. In IFRS also, what we did IndAS. Why? The standards are internationally, but still we have done some changes, and not only some changes, there are drastic changes into it. Why? The need is different. The requirements are different. I think with the due respect to your comments, I think there is something different needs to be understood, different needs to be carved out, and we have to design our own ethical standards, which is suitable to Indian professionals or CA profession as India, which will definitely with considering the international requirements also. I think these are my initial comments. Thank you, madam. Thank you, madam, taking your time.
Thank you, Unmesh ji. Just since you raised this question, Sanjeev ji, I would just invite your comments just in short, because we are running late. The presentation.
I'll be very brief. I in fact made the point, Unmesh ji, that we don't have to follow international. We can converge it. We can modify it, right?
Yeah.
Unfortunately, and I will not go into the politics of electing wrong leaders, that the leaders you elect have approved the, the new code. Yes. You can amend the code. You can overhaul the code. Absolutely, I have no issues. I'm saying implement whatever you do is the challenge before us, number one.
Yes.
Number two, if you have to compete internationally, you have to look at international also, because you can't be living in a cocoon to say, look, just because my conditions are this, I will not look at what is happening internationally. 2. 3, very briefly on NOCLAR. I don't want to debate that. In the council, when this issue was discussed, the government of India said, we will have our own ethical standards under the NFRA rules. We fought with them. We said, sorry, don't have your ethical standards. We will revise our standards. We are revising our ethical standards. Because we did not do anything, Mr. Unmesh, for 10 years after 2009. We were sitting on it.
Yeah.
Why were we sitting on it? So we bring, unfortunately, these things to ourselves by not acting in a timely manner. 3, the last point on independence, till 10 years or 20 years back, the auditors appointed by the management were all fine. Right? So it is the quality of both sides which has created a problem. Independence has not changed. Independence is your independence. You have to be independent. Whosoever appoints you. So I think this appointment by a third party, I'll tell you, if I'm the businessman, why in the hell should I give the power to someone else to appoint the auditor? I'm a businessman. I'm running my business. Why should I give you the authority to appoint an auditor for me? You see, the institute wanted a joint audit. And I'll just finish this here. I was talking to a client of mine, a CEO. He says, "मैं एक CEO को तो संभाल नहीं सकता, मैं दो को क्या करूँगा?" And why should the institute say you should have joint auditor? Reliance has 2 joint auditors. Some companies have 6 joint auditors. Leave it to the management. Institute is a regulator. Institute is not supposed to find work for the members. Our problem is, we do multiple things. And that is what creates the problem. Independence, I think, I have seen, I can take 100 names, I don't want to. In the last 50 years, things have deteriorated in the last 10 years. And it is a deterioration on all sides. Unfortunately, the profession has also gone down, which is very unfortunate. But I think we can do a lot. A lot has to be done by all of us. And I'm happy to, take this feedback. I'm very honest in saying it. Apply standards. We don't apply those standards. It's very unfortunate. I will stop here, Ashwini, because I think we have a lot of things to discuss. and we'll keep
Yeah.
on debating
Yeah.
these things. But
We
absolutely,
will keep
yeah,
one
Thank
session
you.
for this. We will keep a separate session for this.
Yeah.
That will be
look
great.
Yeah,
forward
we
to
will
it.
keep a
Great format,
separate
great format.
session. Yeah, thank
Absolutely.
you, Sanjeev ji, for your brief reply, and I hope Unmesh it answers. Although you have many questions, but still we can take it in another session. Yeah, I now invite Nilanjan Paul. Nilanjan is director in SR Botkiboy and Company, and he heads the Department of Professional Practice. And Nilanjan has been regularly enlightening us on various issues and various changes in acts regarding the corporate affairs. So today, Nilanjan will be speaking on ESG, sustainability. Nilanjan?
Thank you, Archana. I'll just share my screen.
Yeah. Thank you, Nilanjan.
Yeah. So I think from a background perspective, I think Manoj made it quite clear that the world now is looking at going green, right? So earlier the green as a color I think was used primarily by the auditors, but now the color green is the most common and most friendly color which anybody can think of. So as you see on the slide, it has now come up to the finance professional as well to play a key role in this very significant change on sustainability. So so we will talk about certain sustainability related matters today. How is it affecting India? What are the norms that we have at present, and what we are seeing as a global development, and how far or near we are from those developments. So with that, if I can start, that's a brief profile about me. I am a chartered accountant, and with 15 years of post-qualification experience, I primarily have a bit of knowledge on accounting and auditing related matters. So certain disclaimers, what I would like to inform is that the views that we're discussing today are the views of the individual professionals and not necessarily of this particular platform. These discussions are only for educational purpose, and each and every individual who are listening to this should consult their own advisors before they intend to take any particular decisions on these topics. Okay, so so before we get into the technical aspect and the detailing part of it, I thought I will just start off with some global quotes or global voices, as you can see on this slide. So the most impacting comment which I could find was by Peter Baker. He is the president of World Business Council for Sustainable Development, and he made this comment in one of the sustainability meetings globally, which says that the accountants would save the world from climate change. So this happened around a decade back, but it still kind of underlies the importance of this particular change, and also the important role which the global uh, stakeholders are emphasizing on the role of an accountant. Similarly, if you would look at the head of ICAEW, which is corresponding to ICAI in India, uh, the focus is again on upskilling the accounting professionals or finance professionals and highlighting the importance of sustainability in the entire curriculum and the profession of the chartered accountants. So worldwide and also in India, uh, the sustainability framework is being overhauled. It is being discussed at length. There are certain global standards which are in the process of being formulated, and we'll also cover certain of them in our discussions today. So So let's start. What is the need of financial reporting? We have heard about financial reporting. We prepare financial statements. We report to the members or the stakeholders. We also have board report where the management provides their report on the performance of the entity. So what you would appreciate is that all these information are focused on financial matters, right? So the way you assess financial performance of an entity, you assess the financial position, you assess the cash flows. But there is a growing need that how climate change and sustainable development would impact the overall operations of the entity. So globally, there is a big, or if I can use the word, a paradigm shift from financial reporting, which is mostly a post-mortem of events which have already happened, towards more forward-looking or futuristic informations. Having said that, the stakeholders globally are also looking at the behavioral aspects of the corporates. It is not only limited to financial reporting, but other non-financial reporting matters as well. Uh, for example, the responsibility or the impact the corporates are creating on various climate-related matters. How are they creating cohesive working environment for the employees? Are the is the corporate world looking at net zero commitments? So all those things are pushing in a very hard way the need for a sustainability reporting. It will also help in creating a social capital for the entity. Social capital means that the entity will have access to various resources which the society provides, be it capital, be it labor, be it any other resource. But a company which is more sustainable in its reporting will have a much quicker access to all these resources. From a global fund perspective, what I could gather is that the global sustainable fund assets have moved 4 times. So right now, the data that I had was of September 2021. It stands around 3.9 trillion US dollars. So it's a big investment from a global standpoint perspective as well. Okay, so what is in it for us? How is it going to help the finance professionals? Most importantly, the sustainability reporting is not only limited to financial, it is covering all facets of management reporting, be it financial, be it non-financial, and even from an auditor's or from a finance professional perspective, there are ways or there is a demand to provide a separate assurance services or assurance report on the sustainability reporting. So in a way, this particular development is covering all facets of reporting in corporate India. Now, as an accountant, this could be looked at more as extension of management reporting. Finance professionals do have required skills and competence to help the management or to guide the management or on various financial reporting aspects. So sustainability will only add to that particular skill set. Having said that, these would have wider accounting consequences. For example, climate change is a big implication on accounting or from a financial reporting aspect. So again, the financial professionals would be best suited to evaluate and examine these aspects. Also, from a skilling perspective, the finance professionals would be requiring to upskill themselves, develop new skill sets, and in a way, this would help them to future-proof their careers in the finance field. So in my view, it's a very interesting and a very hot topic from a finance professionals, and we will see how it pans out both in India as well as in the global frontiers. Okay, so in this slide, I have just summarized the evolution of sustainability reporting. If you would see, the effort started right from 2009, where the MCA formed the national voluntary guidelines, and they were to some extent adopted by various corporates on a voluntary basis. But more so, what happened is that when the SEBI listing regulation included a specific requirement to report on some of these principles. So as far as listed entities were concerned, certain categories of listed entities were supposed to report uh, uh, on separate matters, which was known as business responsibility report. These were based on the national guidelines which the MCA had kind of formulated. So over the years, if you would see, there were other frameworks which SEBI also kind of suggested. Integrated reporting was one of them. And it was again made on a voluntary basis. But come now on 2021, what SEBI has suggested is that the existing requirement of business responsibility report will be substituted by business responsibility and sustainability reporting, BRSR. Right? It will again be mandatory to certain class of listed entities, which is top 1000 listed entities, applicable from 20 to 23. So financial year March 23 will be the first year when you see these entities mandatorily reporting on BRSR. So if you would see, I am using the word sustainability. I'm not saying ESG, right? So, and since we will be going this topic a bit detail, what I would like to highlight is from a terminology perspective or from a scope perspective, sustainability is a much more wider term. It is not limited to climate change. It is not limited to climate related matters, but it encompasses all efforts of the entities which has impact on various aspects, be it human, be it laws and regulations, be it regulators, be it climate change, everything. ESG is only limited to 3 aspects, which is environmental, social, and governance. So on a snapshot, this the new BRSR, as I said, would be applicable to top 1000 listed entities from 2022-23. What SEBI also realized is that certain entities might anyway be reporting on some globally accepted platforms, for example, the integrated trade reporting or any other framework. Considering the commonality of information, the entities are permitted to cross-refer these information to these international framework as well. Okay. So on a snapshot, if you would look at, that's how the reporting at present has been prescribed. It has around 3 sections: general disclosures, management and process disclosures, and principle wise disclosures. So again, from the principles perspective, the BRSR is based on these 9 principles. And if you would see, they are quite detailed. They cover each and every aspect of corporate reporting, be it the ethical aspect, which is to conduct the business on a with integrity and ethical and transparent manner, responsiveness to all stakeholders, compliance with laws and regulation, promotion of human rights, restoration of environment, and so on and so forth. So it is quite a detailed and a quite encompassing framework which covers all the facets of operations of a particular entity. Okay, so again, going to a little bit of detail. If I talk about the first box, which is the general disclosures, here the entities are required to give the details of the entity, its offices, its operations, its turnover, and all those things. There are 2 particular disclosure which I would request the attention of everyone, is that the disclosure regarding to complaints and grievances. So here the entity is required to identify the stakeholders from whom they would be getting grievances. these are not limited to shareholders, but it could cover other stakeholders as well. For example, bankers, for example, creditors. So if you are receiving, if you interact with these stakeholders, you are first of all required to identify those stakeholders, bifurcate them into various categories, and then for each of these stakeholders, you are supposed to formulate a grievance redressal mechanism. So it is, if I have to give you a parallel example, the way we have a whistleblowing mechanism or a whistleblowing cell, the entity is required to have a similar redressal mechanism for all these stakeholders. The next important disclosure for this particular heading is an overview of entities' responsible business conduct issues. The entity is required to identify and provide details of high priority business conduct and sustainability issues pertaining to environment and societal matters, and also what are the risks and opportunities that would see from these aspects. So again, more from a policy framing perspective, as well as the risk, the identification of risk and opportunities that come out from these policy framing need to be very clearly disclosed. The next box, as we talked about, was the management disclosures. From a management and process disclosure, the management is supposed to identify what is the actual performance against the set standard. This will help the management to find out the deficiencies, if any. They are supposed to inculcate and frame policies on conduct of various business activities. They're also supposed to disclose who is the highest level, or the who is the highest level responsible for implementation, and what are the steps that body is taking for ensuring that adequate decision making and transparency is being done by the management. On this slide, we have just put up some examples of the disclosures that we need to make on various principles. If you would see, the disclosures are required for training and awareness programs. Disclosures are required for what is the investment that has been made in supply chain for reducing wastages. The efforts that is being put up by the management for various compliance with laws and regulation. If the entity is engaging with a particular community, what are the safeguards and what are the issues that the management is experiencing would need to be disclosed. I would like to draw attention on one or two very critical disclosures. For example, the positive or negative impact on human health or environment. If the management is dealing with some unions or some associate institutions which will engage with various policy framing bodies, the management is required to disclose the point of contacts as well as the the matters that they intend to discuss with these stakeholders. So broadly, a very broad kind of a framework, and these are just one or two examples. These are detailed examples which SEBI has prescribed. Okay, so that was all from an India perspective. Let's see what is happening internationally. Internationally, the IFRS Foundation has constituted a new board called International Sustainability Standard Board. It has been formed specifically to look at the sustainability aspects, considering the global focus on this particular topic. At present, what I would like to also highlight that there are other reporting frameworks which are available. The common ones, if you would see on this slide, are integrated trade reporting, global reporting initiative, and sustainability standard board. These These standards are globally well recognized frameworks, and they might vary in depth and detail, but they have a high degree of common information. So what the global standard setters felt, that why don't we try to frame a common platform or a global baseline standard which will deal with all these reporting aspects. So that's how the new standard board, the Sustainability Standard Board, has been formed. The sole aim of this board is to develop it is to develop standards for global baseline sustainability disclosures. It will also engage in a digital platform which will have electronic tagging of disclosures. At present, what the board has done, they have issued 2 exposure drafts. One is on general requirements of disclosures, and second is specifically on climate related disclosures. What is also expected, that over a period of time, based on feedback received on these exposure drafts, one would expect other sustainability standards being issued by this particular board. If I have to talk about briefly about the first one on the general requirements of disclosures, what I would like to highlight is these particular disclosures. If you would see the heading, they would talk about disclosures of sustainability related financial information. So again, IFAC or the IASB has limited these disclosures more from a financial reporting angle, and hence this will complement the other framework which the entities are using. For example, if an entity is following an integrated framework which will include a combination of financial and non-financial information, to the extent it relates to financial information, the disclosures which would be finalized by the sustainability board would play a great amount of importance. Again, these are designed primarily in line with IFRS/IAS. So you will find many common features. For example, they have talked about materiality considerations. They have talked about fair presentation. Fair presentation, as we know, is true and fair view, which any financial statement is supposed to depict. So when the exposure drafts are were being prepared, the standard setters felt that it is appropriate to follow a similar kind of approach here, because ultimately these reports and these information will be filed along with the financial statements, and if a separate presentation approach is followed, then it would only confuse the readers. So the board felt that even for sustainability related financial information, the entity should follow a fair presentation approach, which means the entity would disclose information that is relevant, faithful, comparable, verifiable, and timely and understandable.
At this stage, Nilanjan,
Yeah.
I would like to share a few thoughts.
Yeah, please.
Particularly, you talk now about integrated reporting, and also you talk about International Sustainability Standards Board.
Yeah.
The global practices. Now, it is very good. We are looking at the global community, which is looking at sustainability since quite a few years, but intensive focus since the last couple of years.
Yeah.
Today, people are investing, top funds are investing in companies which have proper supply chains for even giving orders, and vendors who are focused on sustainability. They would even pay 5%, 10% more for the same similar product which has a sustainability initiatives, environment friendly initiatives. It is good, and I would refer to a few companies. I would also request Mr. Amarjit Chopra, esteemed professional, to join and share his thoughts on some of the companies like Mahindra and Mahindra. They have been communicating with me regularly. They started a practice of over 7-8 years ago, a quarterly conference call especially on ESG. Many companies have a conference calls for their result reviews to update them on the results and interact and answer the queries and give supplementary information or guidance from a valuation angle. Now, this the group CFO and the board members mentioned ESG is so important. They started a conference calls on ESG quarterly, which were highly appreciated. And we also had a special conference, I think it was about 5 years ago at ICAI Tower, BKC, organized by the Central Council, where I was a speaker and a few companies, top people engaged in ESG were speakers, including from the Planning Commission, who had experience in the Planning Commission, and also non-finance people. This is how ESG, the importance of that. And Tata Steel has done very good work on integrated reporting. Among the finest, this is what their CFO Kaushik Chatterjee and other board members also shared with me. Mr. Narendran, he was on a board when a lot of importance was given on Tata Steel framework for ESG. Mr. Amarjit Chopra is also on the board of a few Tata companies. He can also supplement. Reliance Industries has been doing some work on that, particularly on green initiative and tree plantation at the refineries, which has been covered. And of course, their integrated reporting is mainly packaging, but good work has been done at the refineries on Go Green initiative. So, yeah, Mr. Amarjit Chopra.
Manoj, thank you very much.
You are here with us. Can you share a few valuable thoughts?
No, I will definitely do that. Am I audible? Am I audible?
Yes, sir.
Yes, sir. Yes,
Yes,
sir.
You are
sir.
audible. And I would also acknowledge Mr. Amarjit Chopra, independent director on quite a few highly reputed corporates, and also on the board in NFRA on the committees, and also a very, very eminent past president of a regulator and examination body, the ICAI, which is at the forefront at the worldwide global initiative as among the largest professional bodies in the world. And of course, we went through a period, Mr. Sanjeev Chaudhary mentioned, for about 10 years, and last 5 years were bad, but the future is bright with so many people coming together from a multidisciplinary angle. Yeah, Mr. Amarjit Chopra.
Thank you, Manoj, firstly for inviting. And let me say that it is always a pleasure coming to this particular forum and sharing some of the thoughts. And whatever is being discussed right now with regard to the sustainability, I am going to add some little more angle to that, very frankly. And I will like that to be deliberated upon. You see, whenever we talk of the sustainability, I was going through one of the videos about 2 days back, on which one of the persons remarks with regard to the various, you can say, startups. He says, I don't understand this concept of the startups where 500 crore rupees are burnt, and basically, and out of that, probably it is only the 10 crore or 15 crore which might be utilized ultimately. He said business is to be run on business lines. So why I'm talking about startups is that, you see, to me, sustainability of these startups is also very important ultimately. The way the kind of valuations have been shown without getting into the sustainability part of the businesses, and then the retention of their employees, the retention of the other vendors, suppliers, everybody, I think it is throwing open a lot of challenges, and we should be looking at, when we look at the sustainability, one part is, yes, whether carbon emission is there, whether environment is being damaged or something else is happening. To me, when we talk of the sustainability of the businesses, sustainability, because if the business is sustained, only then the human resources can be sustained. human quality can improve, the values can improve, the valuations can improve, the employment can be generated. I think one of the most important angles from the society's point of view is generation of the employment. Because if you don't generate employment and there is a lot of unemployment, I always fear that there it can lead to law and order problem, and that leads to the sustainability issues again for the society as a whole. So I look at all these disclosures from a different angle also, because when we talk of the financial disclosures, etc., that may be good enough. But to me, what is more important is whether the business is going to be sustained or not. I'm not talking in terms of the going concern. Very frankly, going concern only looks at another 1 year or 2 year horizon. But when I talk of the sustainability, I talk of the sustainability from a longer perspective. If the business cannot be sustained, if all those things cannot be sustained, in that particular case, it creates all kind of problems for the society, particularly if you look at it from the vendor's point of view, from the supplier's point of view. Look at the way the businesses have been closed down and the kind of losses which the banks have suffered. Today, in IBC, the average haircut that the bank is suffering is 70%. Is that not a sustainability issue? Basically, why the credibility of HDFC is higher, I think we all know when it comes to the banking, because they have not lent out to such corporates or such projects where probably those projects may not be sustainable. So to me, when I look at the sustainability aspect, it is the sustainability of the businesses which is very important, because that affects my society on a whole. So I will not be looking at it merely from the perspective of ecological balance or something else. I think my speaker for this topic has already conveyed this particular point, if you ask me, that it is not only ESG. I think there are many other issues which are to be taken care of. You may lay down an issue that if you are going to set up a particularly idle project, if you approve these many trees, you have to actually plant these many trees. That may be good so far as the environment point of view is concerned. But if you cut the trees, you may plant the trees, but if the business is not sustainable in the longer run, you have already done damages, and at the same time you are doing damage to the society as a whole. So my version of this entire thing is I think we need to have a relook at it, how we can actually assess the sustainability of a business. Because if we can look at the sustainability of the business, sustainability of a particular project, in that particular case, it helps us solving so many other problems. To me, that is far more important than anything else. You talked of Tatas. Tatas in any case have been in the forefront so far as any kind of reporting is concerned, whether it is the Tatas, so far as the country is concerned. People may come and go so far as the business houses are concerned. But I think the governance levels of Tatas, of course, the levels may not remain the same what these used to be earlier. But there's no denying the fact so far as the governance levels are concerned. I think Tatas can be seen differently. And that is why internationally Tatas command a different value, basically, for their reporting, for their transparency, for their practices, everything. And that ultimately leads to the sustainability. If your credibility is higher, I think you are able to sustain yourself under the most adverse circumstances. I still remember that in one of the boards, when the proposal for when they were to take over the project in UK, when that proposal came in, and the question was being asked that whether to fund that particular project or not. I think I was one of those who said that if Tatas are not to be funded in India, who else will be funded in India for that particular matter? Because that's the kind of credibility. And then they turned around that particular company, if you ask me. So what is more important is if you have the credibility, your sustainability is far more compared to the others, basically. So, and then you are able to sustain the society, you are able to sustain the employment, you are able to sustain the environment, you are able to sustain everything for that matter. Because when we talk of sustainability, I think sustainability has much wider ramifications than what we generally think of. To me, what is more important is the people who deal with you ultimately, they are able to survive, The people whom you deal with, they are able to survive, and the employees who are there, they are able to survive. The environment you are able to take care of, and you are able to take care of everyone so far as the society part is concerned. That's all I will like to say, Manoj. Hello.
Yeah, thank you very much, Amarjit ji. I think you have given a different perspective for sustainability and not just ESG, which is very vital because, you know, if the business is there, then yes, trees can be planted and environment can be sustained.
Yeah, I personally feel if the business is there, only then you will be able to plant the trees, then you will be able to control the pollution. If your project is not sustainable, then what are you looking at, basically? So I think first it is the sustainability of the project or business itself, which is more important. And your employees have to be happy. I think the happiness index of the society is linked with the sustainability of the various businesses and the kind of practices that they follow. Today you go to Bhutan, we may say Bhutan is a very small country, but if you look at their happiness index, they are the topmost in the world today, very frankly. They are the topmost in the world so far as the happiness index is concerned. If the people are satisfied, their basic needs are being met, I think that's the best thing to happen. If your employees are not complaining of the residential facility, accommodation, or anything else, or the medical treatment, etc., I think that is what is more important to me than anything else. You see, I will be able to plant a tree. The tree might be eaten up by whenever you plant it, it might be eaten up by a cow. There's no doubt about it. But if you have a satisfied employee, your business will be sustained. If you have satisfied vendor, supplier, I think you go on and you create employment, you create happiness in the society, you add value to the society, you add GDP to the society. I think that's far more important. And that is where the sustainability of the economy comes in, basically. So I personally feel integrity is the most important aspect of the businesses in any case. That whatever business you run with the integrity, and whatever you report with the integrity. If you have not planted trees, why should you say I have planted trees? Unfortunately, we have the practice of keep on saying we have done this. Where is the impact analysis? I think the most important part of the sustainability reporting should be whether we have conducted the impact analysis of whatever expenditures have taken place. Now, today we are all undertaking CSR. CSR is also something to do with some kind of sustainability in the society, if you ask me, because you are trying to improve the quality of life of the people. But whether the impact analysis has been conducted, what people are doing, getting the classrooms painted. I think painting of the classrooms is one part. What is more important to me is the child who has been studying there, what is their pass percentage? How many of them ultimately rose to the levels that you were thinking that they will rise to? That will add to the sustainability of this society, not anything else. I have a very different perspective, maybe wrong. I will not say that. But I personally feel that we have to start looking at, because so many startups starting, funds of the various other investors going down the drain, and we know what kind of practices are being followed. Valuations exaggerated to the maximum. I don't know, even the sky is the limit for that particular purpose. How many banks have been looted as a consequence of that? Can we think of it? So when we talk of sustainability, all those things should also come into play.
Nicely said,
So,
sir. And when we talk about sustainability, we follow the United Nations standards. So they identified those 17 standards, and that talks about quality of everything. So it starts with quality of power, like no poverty, and in like zero hunger, good health, well-being. It also has industry, innovation, infrastructure as one of the factors, wherein, you know, sometimes what happens is that these companies go and set up their manufacturing facility at such location which may be impacted by the climate hazards, because how the climate changes are happening, we are all seeing it. That will go and impact their overall business in a long run. So yeah, definitely the overall quality of taking care of people or understanding business growth is more important than what we are talking about planting tree. Because, you know something, I have been going through some of the requirements, and they talk about three things: scope 1, scope 2, and scope 3 of contributing to the climate hazard, like your carbon footprint. So the scope 1 is when you directly use your carbon, coal or petroleum product to generate your energy. That is scope 1. Then scope 2 comes as when you ask someone to generate it and give it to you, and you use that energy and you're directly consuming it. And scope 3 is about all those transport entities, what you're using, or the service entities, what you're using, how much they are contributing to the carbon footprint. So those things basically clearly defines, and that declaration is what is expected by government. So here what we are seeing is, when they come up with these expectations that we declare that how much carbon footprint we are giving to the society, it may go up and add up to the national determined contribution what we have committed in the Paris Agreement. So just wanted to understand from you, like, do you see such kind of impact we will have with this declaration, which is expected by these authorities in the reporting?
Hello.
Hello. Yeah.
Amarjit is there?
Amarjit sir is there. Amarjit Chopra ji.
Yes. Yes.
Yeah. Aditya. Aditya actually has a question which is open to the forum to answer.
Yeah.
Even Nilanjan can try to address it. So what he is asking about, the three scopes which have been listed in the international standards for sustainability, about the scope 1, scope 2, and scope 3.
Yeah.
So basically, what is that is like, when we look out, when you mentioned that we need to talk about long-term horizon wherein the companies should have sustainability, and when we look for short-term need, that if my employee is happy today, rather than thinking about what will be the situation 10 years or 20 years down the line, probably that may require us to contribute towards this climate risk contribution, what the government and the regulators are expecting.
No, I may fully go with Nilanjan actually, so far as this particular issue is concerned.
Mm-hmm.
But Nilanjan, I will again like to say one thing.
Sure, sir.
That I think our horizon has not to be 1 year or 2 years or what has happened in the past. I think when we talk of sustainability, sustainability is for future, basically.
Yeah.
I don't think we can deny that particular part.
Right.
So if sustainability is for future only, I think we must be looking at those parameters which define that sustainability for future and how to actually evaluate that. That is more important. And to me, one thing is, people may or may not like it. As chartered accountants, getting into those parameters may not be very easy, because we all know what has happened when we have gone in for projections for the various project reports, etc. I don't want to get into that particular part. So probably a special kind of training or a special kind of literature will have to be developed as to how actually chartered accountants can evaluate those parameters which may define sustainability of the various organizations or sustainability of the economy for future. Because when I'm talking of, it is not even for 2 years or 3 years. I think when I talk of sustainability, it is for much longer horizon. So getting into all that is not very easy. And then saying that it is a fair presentation is going to be a much bigger challenge if the chartered accountants are going to attest it.
Yeah.
That is my way of looking at it.
Sure.
So I think it is easier said than done that we will be able to generate that kind of information. We'll be able to report on that. Somewhere or the other, I think only multidisciplinary teams will be able to do it. A lone chartered accountant in an organization may not be able to do it. That's the way I look at it.
Sir, I think that's a very moot point that you just mentioned. And in these slides also, I was trying to cover, from a reporting side, how things are evolving, right? So if you would look at internationally also, the standard which we have on reporting is ISA 3000, which from Indian context is the guidance note on certificates and special reports. So internationally they have a very clear mandate to relook at this standard, especially considering the involvement of experts, which you also very clearly highlighted, that all this information may not be the direct domain of any finance professionals. So what they're doing right now is that they are revising, or they're creating a new standard itself on sustainability reporting. They are actually looking at what are those criterias that the finance professional should use to comment on sustainability aspects, and also on various other aspects on the internal controls and all those things. But your point is absolutely valid, sir, that from a auditor's perspective, most of these information will be forward looking or futuristic information, and hence a more robust or a clear framework by the standard setter is very important for us, or for anyone for that matter, to give assurance on those information.
Yeah. Nilanjan, one point just to have, sir, one question to you, sir. Amarjit ji, one question to you. In line with the sustainability of the business, just one add-on point. What about your comments about the sustainability of SMP practice, or rather the CA profession as such, as an auditor? Can you please comment on that also? Because you have seen such a large horizon.
I can tell you that in the last few years, particularly last 3 to 5 years, I've been talking about it, and I've been saying very, very clearly that somewhere or the other, Institute will have to start looking at the practices in the Mufassil towns. And if we don't do it, probably we are going to kill the SMPs, very, very frankly. I'm not talking of SMPs in the metropolitan cities. I'm also very clear so far as this particular part is concerned. Look at you, but this is also unfortunate that we are a profession which has been there since 1949, basically. We always take pride in.
Amarjit,
we lost you.
We've lost you.
No. Yeah, please. We all have been taking pride in saying that we actually came up with the CA Act. The country came up with the CA Act much before the Constitution was enacted. But look at it today also. All the Mufassil town practices centering around tax audit, not more than that and nothing less than that. I think that's a very unfortunate part. We have to start looking at the various other professional opportunities which these people in the Mufassil towns will have. And also at the same time, I would like to say one thing. To all the small and medium practitioners, it is we who are responsible for killing our own practice. We have been competing with each other. Look at for the private limited companies that we have paid for ourselves. I think it is ridiculous. How can we cake rather than expending? Rather couple of decades, because no institute will be able to lay down the fee levels that you have to charge this particular fee to a particular client. It is not possible. Let's be very clear about it, because it's a contract between the two individuals. The moment you say that this is the minimum fee to be charged, you will be landing in certain other problems which I don't want to discuss here. So I personally feel somewhere or the other we need to develop some kind of other professional opportunity. We develop professional opportunities in the form of Panchayat Raj audits, basically. Believe me. And what has happened? What is the kind of fee that the professionals have charged in case of tendering? What has happened to the banks, ASM or forensic audit assignments? What kind of fee which we started with and what we are ending with? Today, a concurrent auditor of Bank of Baroda, because he's auditing 80 branches, look at the fee that he's charging. Earlier, their fee was minimum 25,000 per branch. By resorting to this practice that will give you 80 branches or 90 branches or 100 branches, they have been able to reduce the fee to about 10,000 or 11,000 rupees per branch. And our own members have been responsible for it. Believe me, no one else is responsible for it.
So what I'm trying to say is somewhere or the other institute has to step in and step in effectively. We cannot only keep on talking with a lip sympathy. Let's be very clear about it. Tendering, I think we decided 10, 11 on certain aspects that if we will keep track of wherever the fee quoted is very low, we'll ask for the cost sheet from the member. Have we done that? We have not done that. So I think there are many issues. Your point is absolutely valid. What about the sustainability of SMPs? There's no doubt in my mind, if we don't step in right now, probably our SMPs are going to be in great danger because income tax practice is going so far as rather than only filing returns with all these faceless assessments, what is going to happen, nobody knows. And we have to convey to the membership at large that they should start looking at FEMA, anti-money laundering, Benami transactions, and GST, RERA, etc. These are the new opportunities which have come to the profession and they must grab it. And for that, FEMA, RERA, and anti-money laundering, black money, Benami transactions, we have to actually inculcate, we have to actually educate the members on that. That has not happened in detail as much as it should have happened. That's all I will like to comment on.
Sir, thank you very much for your open comments on this. The point just I would like to, what is the role of council? And secondly, if we see we are divergent from the core area of audit and assurance, we are going for the other than core areas of practice, then is the syllabus, even the new syllabus, is it relevant or it is taking the requirements in consideration? Because the profession is going to see change in coming years because we are diverting ourselves from the main audit. We need to divert rather. There is no option but left for us.
My dear friend, I can only say one thing. The most unfortunate part has been that the purpose or the objective for which the institute was formed, that was with regard to audit and accounting. And it is here where the credibility has been lost maximum so far as the profession is concerned. All other areas of practice are there because of the resolution of the council, as was empowered under the Act, believe me. But if you look at the preamble of the Act said that you are being created for the purpose of taking care of the various stakeholders through the attest function. That nobody can deny under any circumstances. And now, of course, the entire change is the only permanent thing in life, basically. When the things are changing, you will also have to change in the profession. I think the new curriculum is open to discussion. The comments can be sent by everybody. We have already given our comments to a very large extent so far as that particular part is concerned. And we must make sure that we create chartered accountants who are acceptable globally, both in industry as well as for the purpose of the profession. But under no circumstances, the assurance function importance should be lost because that is the main objective of the entire thing. And I will appeal to all members also when it comes to auditing, when it comes to any assurance function, whether in the form of certification or otherwise, please try to make sure that people are not able to raise fingers on us. That's all I will like to say for now. I don't want to go on.
Thank you, sir. Thank you very much. Thank you.
Yeah.
Thank you, Amarjit Chopra ji, for answering Unmeshji's questions very crisply. We now get back to Nilanjan.
Nilanjan. We digressed from the main topic very frankly, but since the question was raised, I was supposed to answer it.
Correct, right. So I think we can have a separate session for that. We come back to our topic for the day, which is sustainability. Nilanjan, can we continue?
Yeah, I'll just take maybe 1 or 2 minutes to close these slides. But I would just like to respond what Amarjit sir also mentioned on sustainability of business, in the longer run. Sir, I think you made a very great point on the viability of the business, which will then have been enabling the sustainability agenda of various stakeholders. But the way I was looking at this, sir, that all these new disclosures, aren't these enablers which will actually help the business to meet the objective of sustaining in a longer run? If I am sustainable in my behavior or in my approach, won't I have quicker or easy access to capital? Won't I have easier access to human resource? Or won't I be able to liaise in a more cohesive way with the regulators? What I felt in my reading was these are more enablers, which will ultimately help those business to sustain in a longer run. I'm not sure, sir.
Agreed. Absolutely agreed, Nilanjan. No
Yeah.
doubt about it.
Yeah. So I think we were here when we were discussing about the new board that has been formed globally. As I was mentioning, these are just exposure draft which the international board has issued. They are open for comments, and the comment period would end by July of this year. Again, these are based on the existing IFRS or IS. So you will find a very common linkage between the approach and between the terminology. One item that I would like to highlight is that materiality consideration do apply here also. And when the entities are making these disclosures, these would they would be making a very clear-cut and unqualified statement whether they have complied with those requirements. Again, a very common feature for IndAS compliant entities. What I would also like to highlight is that these information would be submitted along with the financial statements of the entity, and that's the reason the board felt that we need to follow a fair presentation approach so that the investor is clear on the basis or on the expectations of the information that will be disclosed. Secondly, they have also issued one more exposure draft, which is specifically on climate-related disclosures. Very quickly, they have talked about disclosure of climate risk, which the entity is exposed to, and what are the opportunities that are available to the entity. So by opportunities, what they mean is that the entity should disclose what would be the mitigating factors when the entity is proposing to deal with the climate-related risks. Now, climate-related risk could arise from two aspects, which could be the impacting directly the physical risks. For example, a new power plant which is being planned to be set up, or if there are any other risk which I am supposed to be exposed to if I am transitioning to a net zero commitment. So let's say I already have a thermal power plant and I want to plan to transition to more greener sources of energy. If I am planning to transition to this source, what would be the risk that the entity would be exposed to? So again, it would cover both these two types of risks, and it will require the disclosure as well as the mitigating factors which the entity is proposing to implement. I would not cover these particular key disclosures, but again, they are very specific and objective disclosures which the entity is supposed to make on various climate-related matters. One of the items which I would like to highlight is on the second box, which is strategy and disclosures, which talks about significant climate risk related disclosures and the effect of those risks on the business model of the entity. So it is not only a good to have or good to have kind of a disclosure. The standard setters are actually trying to link all these disclosures to the financial statements of the entity so that the user can have a much more wider and objective decision making. This I think we just covered when we were discussing about the expectation from the finance professional. Just to again quickly catch up, from international standpoint, from when an assurance is provided on sustainability related matters at this particular point in time, there is a standard which is ICAI 3000, which talks about assurance engagements on audit or review of financial information. From an Indian side, there is no specific assurance standard, but we have a guidance note on certificates and special purpose report. Again, from an Indian standpoint, this could be used when a finance professional is planning to give an assurance on sustainability related disclosures. As I think we briefly discussed, internationally as well, this particular standard is being overhauled, as some of the challenge which Amarjit sir also mentioned, especially on the usage of forward-looking information and reliance on the work of other experts, which is expected. Most of the information which the entity would be disclosing would be based on various subject matter expert. For example, somebody who is an engineer who would be looking at the capacity or the viability of a particular project, or maybe from other green warriors, or maybe from other laws and regulation perspective where we might involve a particular subject matter expert. So all these are critical challenges which the at present standard is being faced. Now, to mitigate this, there is a very clear mandate internationally that a separate standard on sustainability is being should be developed. This is expected to be used by any person who would be performing a sustainability report. So it may be a finance professional, or it could even be used by a non-financial professional as well. So there is a discussion so as to be more flexible in the approach, so that a globally accepted approach is being formulated. Most importantly, the discussion is focusing around developing a suitable criteria on reporting. So at present, the standards are not equipped completely to prescribe a suitable criteria on reporting. But yes, if we can see, it is expected that when the new standards are being framed, they would be looking at this as a key priority area. So that's all I had. If someone has some questions, I would be glad to clarify.
Thank you for the wonderful presentation, Nilanjan. As always, it was very enlightening to listen to you.
Thank you, Archana.
Yeah, I now open the forum for further discussion. Before that, I also want to extend a warm welcome to Robin G. Robin Banerjee. He has joined us, and he is an expert on fraud. He's an independent director on board of several companies.
I like your explanation that I'm an expert on fraud. So I suppose you meant how to commit one and not to get caught.
Well, to be a expert on anti-fraud, first one needs to be an expert on fraud, because you need to know the mind of the criminal first. Yeah. Well, coming back, I invite your views on the presentation by Nilanjan on sustainability, and also open the panel for discussion.
I think it was a very good presentation, and the perspectives added by Amarjit ji are actually fantastic. I think the key word is anything we have to do should be sustainable in the not in the near future, but in the long-term perspective. I think, and as Nilanjan rightly said, these standards are nothing but a goalpost for us to get there. Number one. I think the other important point from my own experience is that Amarjit ji made a very important point that a lot of startups have been getting a lot of money, valuation issues, which I'm not getting into. But what I find when I interact with them as a professional and all, they all lack a very long-term vision, either for their businesses or for their company. And I think that's something that they come with brilliant technical ideas and all, but the way probably a Tata is going about building a business is different from the way a startup is doing. So I think building businesses is key to sustainability. I think it's a very valid point made by Amarjit ji. And whatever presentation I think Nilanjan made would definitely go a long way in building business. That's why we call it building blocks and building businesses. So I think that should be the goal. And as Amarjit ji rightly made mention that it is a multidisciplinary committee which can probably do these standards and assurance jobs rather than take the burden on the entire fraternity. I think those were my comments, and thank you, Nilanjan, as always, quite detailed
Thank you.
presentation. And thank you, Amarjit, for a very wonderful perspective about sustainability. The word sustainability itself is long-term in nature, and I think that's the way to look at anything.
In terms of sustainability, even I would like to share, my perspective over here.
Maybe you can stop sharing. If you can stop sharing, maybe we can see each other better.
Sure, I'll do that. Yeah, I'll do that.
Thanks.
Okay. And in terms of sustainability, when Amarjit sir said that it is the sustainability of the business, if the business is there, then yes, we have the environment and we have everything. In that background, I had a perspective which can throw light, of the satellite cities across India. If we develop the cities and we have sustainability of business in all those cities, then it automatically sustains the environment, and there is no rush of people from satellite cities to the metros and clustering at 4 metro cities or 6 metro cities. And if we have business in across India, across all these small satellite cities, and then why do people need to migrate to mega cities? And that would automatically take, and if we have employment at these places, and we have businesses growing there, also in the wake up of work from home, and people can work from any small offices, then definitely we have sustainability, and then we have environment also. Just trying to connect the dots over here.
A very, very, very valid point, Archana. Yeah.
Sanjeev Chaudhary wants to say something, and then I would like to make my quick comments.
2 points. Good afternoon, sir. Mr. Robin, how are you? Long time.
Good, sir. Thank you.
Coming to Nilanjan's presentation, excellent as always. I think I'll just make one more point, Nilanjan, that it was in our June meeting that we received some inputs with ISBA also from ILFS.
Okay.
And they were seeking our comments on the 2 standards they have issued. I think one thing which I think you rightly said, ESG is, I think, a subset of sustainability now.
Yeah. Because
in ISBA also we have a group which is called a group on sustainability, a task force on sustainability, and not on ESG anymore. So this our board also will hopefully come out with something in the next, I would say, 3 to 4 months. Like we will slightly digressing, but we will have some kind of an exposure draft hopefully by this December from ISBA on ethical standards for professional accountants when we are providing tax planning and related services. A very sensitive topic. I don't know what we'll do in the end, but this is what we are working on right now as a first draft in September, and hopefully exposure draft by December. But on sustainability, I think the PIOB, the international board, everyone is working on it. It is not a buzzword anymore. I think it was a buzzword 5 years back. We need to catch up. Especially, I think, in India, and I think with due respect, I think at times we are lagging behind. And there is no harm in accepting that and moving forward in a positive way. It is not a criticism, it is a feedback. One, I think, has to move at a faster pace. I think what technology has done to all of us in the last 2 years, but for COVID, would have taken maybe 10 years to change. I could not imagine a tax practice doing from home, but I did it for 2 years. I could not imagine not going to the office and still running a tax practice, but I've done it. So I think technology has made a huge amount of changes. We need to accept and move on much faster today than ever before. So I think I'll stop here and would love to hear Robin now. Thank you very much.
Yeah, hi, Sanjeev. I think you made a very valid comment, and Amarjit Chopra ji and Nilanjan made a wonderful presentation, although I couldn't attend the full presentation. But I would like to just throw some ideas as to what is happening to our profession. I feel there are 4 broad trends which are coming into our profession. Taking this cue from sustainability, definitely the governments and the political leadership of the world is expecting our profession to contribute and tell the people at large that is the industry or the businesses subtracting value or attracting value. Sustainability is all about adding value to the society and not negating value from the society. This was not the requirement from our profession earlier. This is a new development, and believe in me, ladies and gentlemen, this development is going to grow fast. Before we realize, it's going to be growing fast and furiously. We may not like it. You will say, who are we? We are not engineers. But because we are the only agency, thankfully we are the only agency who can look into the company's accounts and details in a deep dive manner. There is no other agency who can make it. So if government has to depend on one agency who will say that is the industry or business subtracting value, who else rather than us? And we must now provide confidence to the government and the political leadership. Yes, we can do it for you. Rather than protesting, and I see some of my colleagues are protesting, hello, we are only accountants, we are auditors, what is all this happening? This is complete nonsense. We should take it in our open hands and say this is the way to move forward, because a new opportunity. Otherwise, if we don't do it, our competing associations are going to take it. And they, believe me, they're waiting for doing it. They are waiting to do so. That's one development. So Niranjan, wonderful. I wish I would have gone through the whole presentation, but what you were saying is absolutely making sense, and we better be taking recourse and take advantage of. Number two, Archana has already said I'm a fraud expert. Now, the words were very heavy, but be as it may, on a lighter moment, it is a fact that we, the association, or we, the chartered accountants, will have to identify frauds. Now, we can complain, we can do what we like. What I'm trying to say is, as we are going along in our lives, this true and fair view is not going to work. It will have to be true and correct. Sooner we realize the hakikat, the reality, better we are placed. The society has to believe and has to be assured that when a CA has signed an accounts, there is no fraud. Now, I know it is very heavy, and therefore we have to work towards techniques as to how we can audit, try to do a true and fair view, and yet identify any major risks of frauds. Actually, risks of frauds, and that's a good question. There are two things the society is expecting from us, including the government. One, they are telling us, guys, if there is a fraud, you have to tell us. Two, if there is any risk of fraud, please also tell us. What is this ILFS, NFRA comments? In fact, we all knew for last 4 years what NFRA said. We all knew for last 4 years. Nothing new. NFRA said nothing new. Everything was known. But if you look at the NFRA report, I feel they are saying, what were the auditors doing? Why did not they identify there is a risk of bankruptcy? That's what they are saying. I don't think they are saying, fraud hua tha, Ravi Parthasarathy took more money. They had 300 shell companies or subsidiary companies from 150 disclosed. That's not the main issue. The main issue is, why did in June 2018 the company was AAA? Of course, we are not rating agency. But why didn't the auditors find out the company is going to belly up very soon? So as regards frauds is concerned, we are not only have to find out if there is one, but we also have to, unfortunately, try to tell that there is a risk of one, or there is a risk of the company going belly up. So this is a second development which has happened. The third development which has happened is that as we are going along with this world of our business, there are new avenues for chartered accountants coming up, with accounting communities are coming up. I still feel we are not supposed to only sign off accounts, and that's a very, very small subset. We have to open our eyes and expertise on other areas. Essentially speaking, what I just spoke is that how can the business sustain itself as it goes along? That means if a CA signs a piece of paper and that goes to the banking system, the investor community, and the people at large, they should believe that these accounts can be trusted, and I can trust this business community or the business per se. So we are now have to play a much more larger role than just what we were playing earlier, and not take this cudgel under the concept that we are not a bloodhound but a watchdog. We are not a watchdog but a bloodhound. I'm so sorry. We are a watchdog. We are a watchdog because this bloodhound and watchdog was enunciated 100 years back, and 100 years, a lot of water has gone down the Ganges, and we cannot take cudgels onto that. The last one, my submission to all of us is, we now have to develop other skills. Cryptocurrency perhaps is going to die and should die, but the blockchain is going to stay. And therefore, those sort of AI blockchains, and I know you guys are discussing quite a bit, and other MISs and all these artificial intelligence, big data, all these things which are taking place around us, including core financing. There are several methods of financing which is coming up because of this fintech companies. In fact, if you look at, and many of you must be working on it, their method of financing is completely different from what you have ever read in the financial literature, have ever read. So, and RBI has obviously been at it as to clean up the stables. So having said that, my submission to all of us as a community is that let us also look at other avenues, and let us learn those avenues, so that the industry, our association or our profession can grow faster. Because I have this feeling that Institute of Accounting and all that which government is thinking of is because I think we are not living up to the expectation of what the society is expecting from us. Unless we do that, we are in a big, big and grave danger. I know we have spoken about it earlier, but food for thought. To summarize, I think sustainability, we have to be very good and assuring the society that the industry is actually adding value. 2, we have to not only identify fraud, but also perhaps have to get into an area that we have to identify risks of potential frauds. And 3, we also have to tell the society there would be no bankruptcy. If I have signed a piece of paper, this business is sustainable, both commercially and otherwise.
Thank you very much, Robin ji, for giving, for explaining in a crisp manner about the pertinent issues on sustainability and fraud risk. Our next presenter is CA
Sanjeev wants to say something.
Yeah, okay. I'll just add one more thing. You know, at ASBA also, and just to add to what I think Robin said, we are also considering now, should this international standards apply to non-professionals also? You see, because if you look at the board, its nomenclature is International Ethics Standard Board for Accountants. So it is a board for accountants. Now, I think on sustainability, we feel that we are not the only one who can report. There are many others who can report. And the question is, should there be standards for them also? I mean, should there be is the first question, and the second was, which is the first question, can ISBA set standards for them also? Because it is a board for accountants only. So a survey is being conducted, and we will go into this, that should there be standards for non-professionals also, non-accountants also. I think, as Robin said, there is enough and more competition already in every space except probably the audit field. I mean, you look at as Robin said, in a lighter vein, frauds. I remember in BSR / part of KPMG in '97 we started this practice. It was almost 25 years back. I think we have to look at what avenues are coming. And I think one more point, then I'll close, is that we should not look at the institute as providing work to us. This is somewhere we feel, what is the institute doing for me? What work are they generating for me? I think the institute has done its duty in giving us the education, the training, and a degree, a qualification. Post that, it is up to each one of us to decide what we want to do. Excel, skill, upskill, do industry, do practice, go abroad, not go abroad. It is each one of us. I mean, we can't be going to the institute and saying, well, where are the bank audits? Why are they going away? Where are this audit? Why is it going away? I think if the quality is good, nothing will go away. That's what my feeling is. Unfortunately, there has been some compromise with maybe a small percentage, which impacts the entire profession. I think audit is critical. It is core, as Amarjit ji also said, very important. The backbone somewhere. but we need to, I think, widen our horizon with the changing in technology, changing in expectations, etc. And I'll stop here. Thank you.
Thanks, Sanjeev. It's a good point.
Manoj, one line only. Manoj, one line.
Yeah, one second. Yeah, just let me take two on this. Sanjay, you mentioned a good point about a standard should extend beyond accountants. It's a very, very important issue. It has to happen at a multi-stakeholder level, all the stakeholders, particularly boards. In fact, there is an interesting thing in the chat box about a link where SEC, which is the most powerful body among investors in the world, is investigating Goldman Sachs on their role in ESG. Very interesting post. It is good. I would like to just a couple of points Mr. Robin Banerjee can share on from what he said. Mr. Robin Banerjee, you mentioned about IIA. In that context, if possible, in briefly, you can share your views on the new curriculum and training, how that can really meet up the expectations of society, and any important changes, because 30th June is the last date for comments. Any important changes which you expect which should happen?
Before Manoj, before that, I think Umesh wants to say something. Umesh?
Yeah.
Umesh?
Yeah. Sir, just one line. As Sanjay rightly said, the sustainability is not only concerned with the auditor, but it is this all stakeholders, right from the accounting, the accountant itself, till the auditor last stage. Everyone has to contribute that. That is really a fantastic point that he has raised. And it should be contributed by everyone at every levels. We are the last to report it, but in between the process has to be started from the company itself, from the accountant itself. And one more addition is just, it is ultimately the self-enlightenment that is going to do everything. If you are enlightened yourself, what are your duties, responsibilities, and everything? Let it be the management, let it be the accountant, let it be any professional. If that enlightenment is not there, nothing is going to happen. I think that's what my comment. Thank you, sir.
Manoj, I have gone through cursorily the new so-called syllabus, course content. Looks good to me, but I think we still suffer from the core issue of ability to communicate. Core issue. This, I think, we have still not addressed. As we have when we have passed the CA and the time the current people are passing CAs, the course content is changing with time. The way the questions are being asked is also getting much more, let's say, in sync with time. While case study method is difficult, but the way I have seen the latest questions are working towards the case study method concept, given the issues which we have. However, what about our ability to communicate? Who is our competitor? And that is what we need to benchmark ourselves. Why is IIA coming? Because our competitor is IIM. It is the top 30 management institutes, maybe top 50, if at all we can say that. Not all the 2,500 management institutes, they are not our competition. It is a top 30 or top 50, if I have to extend a little more. They are our competitors. They are the one who is eating our jobs. If an IIM MBA joins as a management trainee in Hindustan Unilever, his or her salary is 12,000 rupees. A chartered accountant management trainee is 7,000 rupees. What nonsense this is. In our time, both of us used to get 750 rupees. Whether it is IIM, IIT, or ICAI, which means over a period of time, already the industry or the economy have started denigrating us and giving a value up to the IIMs or to so-called ISBs of the world. Why it is so? It is not that our knowledge is less or our course curriculum is less. The only reason, if I may have to communicate, is we do not have the ability to communicate. That means the presentation skills, the communication, both oral and written. This, I think, we still lack. And this current curriculum, whatever I have seen, is still not addressing it unless you guys have known what to do. This is the only comment I have, Manoj.
Yeah, and Mr. Robin, some thoughts from you. Before we had 3 deep dive presentation on the series of NFRA orders, Prabhu and ILFS. Robin, some thoughts from you, and then Sanjeev, and then I think Harsh, you are getting ready for the presentation.
I have seen the NFRA order. In fact, you have passed on me this whole 100 page was not possible to read overnight. But NFRA order is no difference from the forensic order. There is no difference. The only the slant is, if I have understood, the so-called forensic audit report said the problems. NFRA is saying, why did the chartered accountant did not find out? Why did they not they anticipate the problem? This is the slant I am able to understand. Therefore, more and more, as I said just now, that we will now be expected to tell the society that a problem is coming. Unfortunately, that is the expectation, because historically we always talked about the past, but the now society is thinking of the future. That's the slant. Ladies and gentlemen, please be careful. All of you, please read the 100-page report, and this is the finding you will get. This is a major shift, major shift.
Incidentally, we'll do a deep dive into the Prabhu Steel order, 21 pages and 390 pages of ILFS. Prabhu Steel, incidentally, the company got listed, no trading since 2001. And annual report doesn't talk about any fraud at all. It is all about reporting and non-implementation of the reporting frameworks.
I think, Manoj, what you said, the auditor does not know what account framework is applicable, whether it is accounting standard or IndAS. I think it is height of incompetence, if you really ask me. In Prabhu Steel, the entire thing only hinges upon 2 things. One is no documentation. Very frankly, if you ask me, and the person comes before NFRA and says that yes, he has pleaded guilty, if you really ask me on various points. And similarly, the IndAS point, he says, I belong to a small town, so I didn't know this. Now, can an auditor turn around and say that I didn't know that which accounting framework is applicable? I think this is beyond one's comprehension. And recently, I will not name the company, there is a listed entity in whose I'm talking of 31st March 22 published accounts. The old format of the Schedule 3 has been used, and the old format of the CARO has been used. It is not the CARO 2020. Now, how do you expect the auditor basically to do all this kind of negligence? No way. At least I will personally feel that you probably faltered on a clause or 2 clauses. But if you falter on the very basic report itself, that you don't know whether it is 2020 applicable or some other report is applicable, I think this is absolutely killing the profession, if you ask me. These kind of professionals are actually killing the profession, if I have to say this. It is not negligence, it is gross negligence, basically. How you can apply to a listed entity accounting standards and not IndAS and then turn around and say, I belong to a small town. What do you mean by small town? Then you don't undertake the audit of a listed entity. Somewhere or the other, I think we have ourselves to blame. I always say the profession will have to take the blame. We cannot keep on blaming the council alone. We cannot keep. After all, the president will not go and tell every person what particular standard is to be applied to which position, which particular entity. Now, if the auditor is not even able to read what he has to apply in the reporting framework or the accounting framework, I think the person will suffer, so far as that part is. And so far as your other order is concerned, very frankly, if you ask me, it is more on independence. It is not on anything else. But there I will like to ask only one question, and that I need to be debated here.
You muted, sir.
Possible that
We lost you, sir.
firm has done something. But what was the CFO of the company doing? What was the audit committee chairman doing? What were the directors doing? Didn't they know that E&Y globally has been handling their assignments? The CFO knew it. The audit committee chairman knew it. Why they are not to be handled? To resign immediately. Why not? Or whatever things take place against those directors also, those or CFO also, those actions should be taken against the. I can feel that so far as this man is concerned, they had some interest or they didn't have the interest. I don't want to get into the details thereof. To know why CFO should not be hanged and why independent director should not be hanged. After all, they knew what the EY has been handling for them. If at all, hello.
Amarjit Chopra ji, we lost you.
No, it is okay.
Yeah, you're back. Yeah.
No, you have not lost me. Don't worry about it. Not for 2 more years. You are not going to lose me.
Sir, I don't think we will ever lose you.
God willing, you may not lose me for a few more years. I don't know. So, anyway, what I will like to say is, after all, you have to fix the responsibility of everybody. MCA should step in, SEBI should step in, someone else should step in. We have the problem with the society.
Sir, we are not able to hear. So, voice is cracking. I think internet connectivity is the issue.
Okay.
He's in a car, that's why.
Am I audible now?
Yes.
Or the net is cracking?
Sir, it is cracking.
Someone else. No, you may go ahead with someone else.
Sure. So, Manoj, so should we start with her presentation till the time that
you can ask Mr. Dedia to start the short PPT, and then I have 2 important questions for Amarjit Chopra on Prabhu Steel, which he will address as soon as he is back.
Right.
So I think Sanjeev sir has raised his hand. Does he want to speak?
Just one minute, Harsh, I'll take. I think
sure.
On CRET, I think someone had raised a point. I think CRET or the change in curriculum is such an important thing that this 30-day period and give your comments sitting in your room, I think is not the right way of doing it. You know, when these CCMs can hold meetings for their election rallies all over the country, why can't the institute hold small group meetings of 15, 20 people, where a CCM can be present to take the feedback, deliberate, discuss, issues, what is the requirement, what is the need, what is the expectation, what need to change. You can't be changing curriculum after every 5 years, not knowing where to go. It's very important for us to change the curriculum the right way as to what is to be done instead of, tinkering, changing and not changing and doing it halfway. Very, very critical, because this is such an important thing which should not happen every 3 years or 5 years. I think we did something 5 years back, we are doing it again today. Just on the short point on the CRET, but other point, I think Harsh wants to make a presentation, then we'll go into it. Thank you very much.
Yeah, thanks Sanjeev for mentioning about this point. It is observed by many people, this change is purely tinkering. And also 30th June, yesterday I told the council member, the discussion has just started. And why don't you come today on the platform to discuss? He said he will try to come, but about a date change of 30th June, it is, there could not be a commitment. I hope it is extended. And there are 2 main issues regarding practical experience. That is not addressed at all in it. And also they are creating 2 grades of chartered accountants, 2-year training, 3-year training. Everybody is asking for, will there be 2 grades? Earlier there was accounting technician and CA. Then I think accounting technician was a failure.
Yeah.
Now nobody talks about that word also. It has been forgotten by many, except those who are closely involved. Now again that 2 years and 3 years. I wonder what's the sense. If you want an average, why don't you make it 2.5 years for all and give an option for somebody to work under partner or director of a professional firm, or maybe a vice president in an industry or a startup. So option could be there, but at least this 2 grades should not be there. Apparently, it means that 2 years thing would become a technician and who will get employed in BPOs. Is that what we are trying to create? It's a good point you have raised.
Yeah, so I think many things to be debated, sir, because I can't be writing so many points. So I may have a point, I may hear you, you may have a view. We should debate, deliberate, and then only the thought process will come. I mean, you are looking at a profession for the next 10 years. Can you say in 30 days, please sit in your room, give us your comments? And we are the most knowledgeable people sitting in the council to discuss, deliberate, and close it. I think hear us out, deliberate, discuss, and then close out. I have no problem. Ultimately, someone has to decide. Absolutely fine. But give sufficient time, because this is the next 10 years you're looking at. Deliberate, maybe in smaller groups, 15, 20, 25 people. Don't make it a gathering of 100 people where there are 80 students and 5, chartered accountants sitting and not even deliberating. It is not tick the box that I've done 30 days, I've taken the feedback and, well, move on. I mean, that's my view. I may be wrong, but I thought I'll just kind of air my view.
You are 100% right. And also, Harsh, I think you are starting the presentation, deep dive into Prabhu's
Manojji, just a 1 minute. See, of 72 years or 73 years we are gone, we are saying we are professional experts in accounts and auditing, so and so. But our profession, CA degree, is not recognized as a master's degree as of now. Rather, I have suggested for the interpass to be Bachelor of Business Accountant and CA to be master degree. It should be recognized as a master degree across India. I think this is a very sad scenario. After 72 years, we are not able to get it into it. This is really pathetic, and council's role has to be.
Umesh, your video is on. Umesh, just see your video is
on. Let me check. Yeah, now it is on. So the point is that our profession, CA profession of having, we are saying we are masters, but why not it has been recognized as a master degree? Even very recently, it has been considered as a bachelor degree. Why it is so? Such a 7 years or 8 years, I think normally it takes 5 to 7 years minimum or even experts to pass out the CA degree, and in spite of that, we are not being recognized. Again, there is one more point. Just I will take not more time. See, now the 2 years this thing practical training is after the passing of intermediate examination, both the groups. I think that's going to create a hell lot of problem. The issue is that presently the 15-16% of passing of intermediate, if you see, it takes 3 years, 4 years time. The problem is that if you are going to start the articleship after intermediate, after 2 to 3 years, no one is going to pass in that first attempt. So how the articleship will be available, article student will be available to the chartered accountants. And if you see, the life expectancy has come down to 50 or 60 age. In an average age of 18, if the CA starts, CA 12, after 12, if he's starting, by 23, 25, if he's completing, what is the professional age he is going to get? 125 years. What is going to be done in that 5 years will be down the line, he has to initiate the practice. Within 5 years, you will not able to get some good practice as such. So people will move to industry itself rather than practice. So what is the profession? Where is the profession? I think there's creating many issues. And I have written it, and our feedback method has been very pathetic because there is no extra column for general comments. These are all general comments. These are not to the specific subject oriented or topic oriented comments. Here there should be one annexure. Open comments should be invited from the members, as rightly said by Sanjeev sir. There should be debate on those points and then things to be taken. And 30th June is very short deadline. It should be extended by further 1 month at least for open debate across the India. Then it will give some fruitful outcome. Otherwise, it will be really problematic. Thank you, sir.
Yeah, that's a valid point about extension, at least by 30 days. And that action should take place from the day. It should be open suggestions on the blog of the regulator, yes, the examination body. There should be open things, so everybody should be able to view the suggestion of others.
Yes.
Without that, it is totally useless and total fiasco.
Yeah,
In fact, if IIA comes, apparently from it seems that IIA may be having a 2 years course, but IIA will go several notches higher with this type of fiasco which is happening on getting suggestions which are not open at all. It should be clear blog which is happening in international bodies. When you give a suggestion, one comes to know the suggestions of others.
Yeah, and one
Otherwise,
more
it will become a wheeler dealer like that. Awards they have been giving to some mindless companies. People are saying there was lobbying for Reliance Industries for an award during the period office bearer was on a council. It was rejected. It got a silver award, and another company got award. Tata Steel did not get the award for the best integrated reporting, or Mahindra & Mahindra did not get when they have set the best benchmarks. Only thing is they are not interested in lobbying for awards. So this is a good point about open system. Yeah, can we have a presentation on Prabhu Steel? There's a lot to discuss on Prabhu Steel and ILFS. Archana?
Hello? Hello?
Yes, Harsh,
Hello.
we can hear you.
Sorry, I was on mute. Welcome, Harsh. Harsh is a CA, chartered accountant, and a stock market enthusiast also. He is also a registered valuer. Today, welcome Harsh to present his analysis and presentation on Prabhu Steel Financial Reporting Quality Review Report issued by NFRA, which was issued about 3 days ago. Harsh?
Yeah.
Can you on your video also?
It's there.
Yeah, okay.
Is it on, right?
Yeah, it's on.
Yeah, okay. Thank you. So first of all, thanks to Manojji for providing me this opportunity to present first time in this wisdom series. I have been beneficiary for wisdom series for like nearly 4 years. I have been listening to all the experts and all the excellent presentations, but this is my first time to give a presentation in wisdom series. So starting with this FRQR, Financial Reporting Quality Review, as Amarjit Chopra sir said and Robin Banerjee sir said that it is more of a forensic which is done by NFRA. Not only audit quality, but even financial reporting quality is also reviewed by NFRA. That is actually a responsibility of NFRA as per Section 132 of the Companies Act. So this FRQR was actually issued in the month of February 2022, which was given to the company and the auditor for their comments. What we have seen in last 3 days ago, that was the order barring the auditor because of his gross negligence. I mean, what Amarjit Chopra sir said, that it is not only a mistake, but it is a gross negligence on the part of an auditor. More of a listening party. Let's deliberate on some of the issues. It's a very small presentation. So first of all, to give a little bit of brief about this Prabhu Steel, it's a listed company, but a very lesser known listed company, because as Manojji said, that the trading of Prabhu Steel was stopped somewhere in 2001. It was listed in 2001, and the trading also stopped somewhere in 2001. They are based out of Nagpur. It started as a manufacturing capacity manufacturing unit of iron and steel products. But as per their annual report of 2020-21, they have been saying that they are now into only trading and supply of some of the steel products and those steel sheets, which was also one of the questions raised by NFRA, that there is a misleading information that are you a manufacturing unit or a trading unit. Also, their bankers are IDBI Bank and one very lesser known bank called as Nagpur Nagrik Sahakari Bank. The auditor of the company for the year 2019-20, which was the year under review by NFRA, then was some person named Gulshan Jagdish Jam. It's a proprietary concern, a very small audit firm based out of Nagpur. Post this full fiasco of quality review and barring the auditor and everything, now they have changed their auditors to Manish and Jain and Company, which is again based out of Nagpur. It's a partnership firm. So the recent limited review, which has come in May, was audited by Manish and Jain and Company. So as Manojji also said that the trading was actually stopped somewhere in 2001. Although it's a listed company, but it's a dead listed company. So there is no movement in the stock markets as such. Some little bit of financial summary, just to have some numbers and have a perspective of the business and if at all any fraud conducted by the company. This is a small financial summary. I mean, you can see revenue from operations, EBITDA and net profit and everything. I mean, broadly, it's a profitable company. The business is, I would say, a stable business, not a growing business, but a stable business. And they have a proper operating margin and they are actually profitable company. One very interesting fact which actually came to everyone's eyes now, that the audit fees which the auditor was charging for those years 2018, 19, 20 was meager. I mean, just 50,000, 70,000 rupees of audit fees. Now, just imagine for a listed company where there are 3 limited reviews, quarterly reporting, and 1 finalization. It consumes your time, your team's time. So obviously, I mean, the audit fee should commensurate to the time which the audit of a listed entity requires, that it demands. Now, obviously, I mean, the responses which were given by auditor, and it has come on record in the NFRA's order, that the auditor was saying that I was not aware about IndAS framework since I was from a small city, from a small town. Well, that actually shows how gross negligent he was. If that was the case, then he shouldn't have accepted the audit of a listed entity, because obviously it comes in the eyes of everyone, in the media, in the public shareholder community, everyone. So I mean, accepting an audit of a listed entity at just a audit fees of 50,000, 55,000, 60,000, we actually was an eye opener that he was just compromising with his professional duty. Also, post this financial reporting quality review, the company itself accepted that yes, there was misreporting, there was gross negligence, and that's why they revised their 2020 and 21 balance sheet financials, and the annual report also got changed. So this was that order which came just 3 days back, I think, on 21st June or 22nd June, which barred the auditor, and it has issued a sanction of penalty, monetary penalty of rupees 1 lakh on the auditor, and it has barred auditor from auditing profession for 1 year by not by accepting any statutory audit or internal audit assignments, which actually it's I mean, considering the city from what he is, and considering his the status of his practice, is actually a very huge penalty for him. But I mean, that's how NFRA takes the decision that I mean, considering the situation and considering the audit firm size, that's how they charge the penalty and charge the consequences for the gross negligence. So let's look at some of the issues which NFRA pointed out in its financial reporting quality review. The first and foremost, the basic requirement, which was accounting standards framework, as Amarjit sir correctly said, that a listed entity has to be under IndAS framework, and this has been since I think 2016-17. And now, I mean, the full auditing profession properly knows that all the listed entities has to be under IndAS framework. Now, NFRA actually went, I mean, they analyzed between the lines, and they correlated directors report disclosures and audit report disclosures, and they actually found the differences, the discrepancies in both. And that's how they came to know that IndAS framework was not used, was very loosely used for financial reporting. Whereas the director report itself says that the financial reporting has been done as per the applicable accounting standard, I mean the IGAP, and it was not as per IndAS, which was the basic requirement. And I mean that actually says how grossly negligent the financial reporting was done, and also was audited by the auditor. Secondly, there are many mandatory disclosures as per the Division 2 of Schedule 3, as per Section 133 of Companies Act, and as per IndAS 1, that is presentation of financial statements. One important disclosure is, I mean, it's called statement of changes in equity, that actually forms the part of a definition of financial statements as per Section 240 of the Companies Act. It not only includes balance sheet, P&L, cash flow, but it also includes in the IndAS framework a statement of changes in equity. this full annexure or full disclosure of statement of changes in equity was not given in financial reporting, because I mean, neither the company knew nor the auditor knew, and that's why it was missing in the annual report, which was also again a gross negligence. Thirdly, the initial annual report, which was uploaded on the website of a company and which was also first given to NFRA, coincidentally, in that annual report, the schedule of property, plant, and equipment was missing. Now, was that intentionally, or was that a mistake that's not known to NFRA also? But I mean, initially, the annual report which was given to NFRA, even in that annual report, the annexure of property, plant, and equipment was missing. Then NFRA asked from the company that why is this missing, and then they gave a reason that it was by mistake, and they issued the revised annual report. So the even that, as per NFRA, it was like giving a misleading information to public, because your annual report is supposed to be uploaded on the website, and I mean, you have actually misled in public by not giving that annexure. Also, one important aspect was that the ROC return of MGT 9, where you have to give all your investments and all your shareholding pattern. In one of the section of that MGT 9 return, the company has given that they have an associate company in which they have a stake of some 8.5% or 9%, called Haryana Metals Limited. But I mean, the directors were the same. What they were in Prabhu Steel, they were also in Haryana Metals. So accordingly, they were having a significant influence over the company, and that's why they classified the company as a associate company. But the consolidated financial statements, which is supposed to be given for associate consolidation, the one line item consolidation, was not given in the annual report. So again, that was also misreporting. And NFRA pointed out that again, this is a gross negligence on the part of financial reporting. Some of the faulty disclosures relating to income tax were also pointed out by NFRA. So, for example, in IndAS 12, that is for tax accounting under IndAS, which mandates to give a disclosure as per balance sheet approach, that whichever item have an effect on the timing difference of income tax should be disclosed separately in the notes to accounts. But that disclosure was not given. It was just loosely accounted as whatever be my provision of accounts, provision for tax in the current year will be deducted or added in the deferred tax liability, and accordingly the disclosure was made in the deferred tax asset of liability. No separate annexure was given in the notes to accounts. So again, there was a disclosure requirement which was not made by the company. Also, one very important disclosure relating to defined benefit plans of post-employment benefits, which is supposed to be given as per IndAS 19, what we generally see as actuarial valuation and actuarial measurement of defined benefit plans. The full annexure is supposed to be given as per IndAS, but even that full annexure was missing in the annual report. Probably the company didn't knew that this annexure is supposed to be given. Even the auditor was not aware that the valuation of such post-employment benefit should be done by actuary, and it was missing in the annual report. Many IndAS classifications and I would say the differences in the financial and non-financial assets were just bogus, or I would say very loosely accounted or very loosely classified. Financial assets like shares and non-financial assets like land were classified as a stock in trade. Now, when NFRA asked from the company that please comment on this, the company was of the view that they were held for sale. I mean, the land was also bought just to be held for sale, and that's why they were classified as stock in trade. Whereas the company is actually into the business of trading of steel business. They were not into some, say, real estate business, so they can account land as an inventory. So even again, no proper classification was done as far as assets are concerned. There were also inadequate disclosure in the accounting policy of inventory, where just loosely worded accounting policy was there that inventories are measured at a cost on net realizable value, whichever is lower. No proper cost formula, which is a mandatory requirement of IndAS 2, was given in the accounting policy. Also, classification of non-current investments into trade and other investments is actually a requirement of IGAP Schedule 3. That is Division 1 of Schedule 3, not Division 2 of Schedule 3. Division 2 of Schedule 3 has a different requirement, different classification of current and non-current investments, which was missing, and it was just blindly following the IGAP as far as notes to accounts were concerned. Many disclosures relating to statement of cash flows were actually misleading. The nomenclature was using the same of IGAP and not of IndAS. As far as financial instruments are concerned, financial instruments disclosure was concerned, was not complied with properly by the company because it was not giving disclosure relating to significance of financial instruments and nature and extent of risks arising out of such instruments. Also, the company has to give how they have been measuring and hedging the risk of financial instruments. The full disclosures are supposed to be given in notes to accounts. None of those disclosures were given in the balance sheet. Also relating to fair value measurement, no disclosure as such was given in the notes to accounts. So these were, I mean, the high impact problems, or I would say high impact misreporting in the financial statements, which were reported by NFRA in the FRQR. The most important one was this one, where IndAS 109, we all know that all the financial assets and liabilities, all the financial instruments are supposed to be at a fair value, and the disclosures and the recognition has to be done as per IndAS 109. In the balance sheet of Prabhu Steel of 1920, the debtors, loans and advances nearly accounted for 80% of the total assets, out of which nearly, I would say more than the debtors for more than 6 months were nearly 40%. Loans and advances were all unsecured. So NFRA questioned that why there is no exercise of expected credit loss provisioning, or has the company has done any exercise relating to ECL provisioning, to which the company replied blatantly that every debtor and every loans and advances are unsecured, but they are good. We are able to recover our advances and debtors and everything, and that's why we don't require any ECL provisioning. So, I mean, probably even the auditor didn't knew any of these aspects of IndAS. So, I mean, he was also just, I mean, grossly negligent regarding the disclosure requirements. So this is, I mean, broadly about Prabhu Steel. I mean, just broadly to give an idea, I mean, the auditor is going on record and saying that I am from a small town and I don't know anything about IndAS. So, I mean, although I accept my mistake, but I am not aware about any IndAS framework and all that. This actually is a very, very loosely given reply and like a stint on a CA profession. So thank you. We can deliberate.
Thank you, Harsh.
Thank you, sir.
Thank you for the wonderful presentation. Yeah, I open the forum for discussion. Yeah, Ram Prasad ji, are you there?
Yeah, very much there.
Yeah.
I think, my presentation were on similar lines. I think the fundamental error of the framework itself is something that is a bit
correct. So should we deliberate now, or we will?
But I have one question. If Mr. Amarjit Chopra is online, he can respond. Mr. Amarjit,
I'm online.
One important thing: the auditor has been punished. Second thing is, what about a CFO? Who will take action against the CEO, CFO? Can our DC or BOD of our professional body, can they suo moto take actions against the CFO, or the CFO gets away scot-free?
No. I think institute should start the proceedings against him, or even the MCA can go against him.
What about a BOD and this one, DC? Would they start? How soon can they start?
I think they should be starting any day. No, once the CFO is if CFO is a chartered accountant, I think institute must go ahead immediately. If the auditor has been punished, why not CFO? After all, CFO has been preparing the accounts, and the accounts have been the responsibility of the management. And he has been telling the board that everything is okay so far as the account presentation is concerned. How can he be spared on this?
Very good thing. Another thing is
unfortunately, one second. Unfortunately, the truth is somewhere else. The truth is, as of now, the company management or the people behind the company fraud have not been taken to task. That is reality.
That's it.
Because
that SEBI can go against them, no? Why SEBI should not
as of
these kind of promoters?
So, sir, unfortunate truth is that in how many cases the company management, the people behind it, the board of directors, the CFO, the management, the independent directors, and so on and so forth, how many of them have been taken to task so far? None. Except
that was my question. No, that is what I asked.
Sir, except for
that was my
DHFL.
question precisely.
I agree, sir. Except for DHFL, where the auditor, the internal auditor, who was, I think, deputy company secretary, who happens to be the internal auditor also, who has been jailed. Apart from that, hardly any step has been taken, because they say that we did not connive. It is because what happens, criminal case gets done, and criminal case is very easy. It fights for 10, 12 years. So, sir, Amarjit, sir, you are absolutely right. We need to do something. As a council, we need to do something. And if he's a chartered accountant, for sure, we need to do something. Yeah. Naming and shaming is definitely now needs to be done, but it's not happening. The truth is that.
Yes.
Manoj, at this stage, I will be leaving because I have to enter a particular meeting. Thank you very much for the opportunity.
Short question, Mr. Amarjit. One short question. Short question. Considering this negligence about awareness about IndAS reporting framework, do you feel there should be a test or an exam by ICAI for clearing the people who are signing reports? Because this can be only tip out the iceberg. There can be hundreds of such cases. And we know 80% of the people are not even aware what is NDS and how many standards are there. Would the exam or a test approach or a kind of a clearance process?
Very frankly, Manoj, this seems to be an aberration that the auditor didn't know what the NDS is when he's signing the accounts of a listed entity. Yes, if we come across another 3-4 such cases, then it could actually throw out the need for that kind of a test, not otherwise. I don't think it should not be a need.
Amarjit ji, I know you are in a hurry. And this is being a close group. I'm the board of SME Chamber of Commerce. And let me tell you, I've heard at least 2 more instances of our colleagues who are saying we do not understand the latest changes, what's happening in the accounting system. They don't even understand the IT system. They cannot get into the IT network. The matter is very, very bad. The CAs who have passed about 20 years before, they're still practicing. And unless they have got youngsters in their team, the standard of their knowledge has become really pathetic, sir. Unfortunate truth, sir.
I agree with you to an extent, but I don't think that there should be a knee-jerk reaction. Basically, the institute could actually debate on this particular issue, and if they feel the need, I think FRRB can actually get into more and more accounts of the listed entities or the entities to which the IndAS apply. And if they still come across some of the cases where these kind of situations are there, probably even mandating a test should not be a bad idea. Okay, sir.
Yeah, thank you, Amarjit sir. But just a short question in the interest of the institute: whether this case of Prabhu Steel was identified suo motu by NFRA or it was referred by FRRB?
No, I think it was a complaint by SEBI, if I'm not mistaken. It has to be a complaint by SEBI.
Okay.
Thank you.
Thanks a lot. We'll look forward to having you again and again. I acknowledge Mr. Sushil Agarwal, independent director, who is a part of think tank for a long time and independent director in many well-known boards. Sushil, are you there? I'm there. Can you put your video on? Some thoughts from you, and before we have another deep dive presentation from Mr. Ram Prasad.
I think Sanjeev ji wanted to say something.
Yeah. I just wanted to make one comment very quickly. You see, if the no-CLAR provisions were not deferred by the institute, the no-CLAR provisions actually said, there's a clause 260 and 360, where the no-CLAR provisions are applicable to a CFO also, of the listed entities. So I don't know, sorry, the disturbance is from whose end. There is a lot of disturbance coming in between. Is it possible for others to put their things on mute? So probably the noise can go away if it is from some other side. Yeah, I think it's much better now. So I think Noklar, Manoj and Archana basically took care of the position that certain things which are applicable to a professional accountant in practice equally applies to a CFO on the other side. So Noklar is obviously different, and the thought process is different. It is on other laws and regulations. The idea is the preparer of the document is also responsible for the defaults, not only the accountant who's doing a certification. And I think that's where I think someone made a point that I think maybe Robin made a point. Has the company been hauled up? I mean, company can be other management people also who can be hauled up by SEBI. But if there's a CFO sitting who's a member of the institute, should be hauled up by the institute only. And he should not be spared because he is equally responsible, or in fact more responsible, for not doing his job first. So I thought I'll just bring that point on Noklar also, which takes care of the issue that the CFO has an equal or more responsibility as a preparer than the auditor, who's then a reviewer actually.
I completely agree, Sanjeev. The institute must get into the act now. Unless now we bring confidence into everyone else, we are now slowly dissipating ourselves. We must do that. Absolutely. And I wish Amarjit ji and people like them can do, because we can keep talking and nothing will happen, because powers that be are not listening to us.
Yeah.
They are running the show that they believe they need to run.
Yeah.
But the world has changed around us, and that's the problem. The world has changed, we have not changed. That's the issue.
Yeah,
Very bad, sir.
I absolutely agree.
Archana, I will also just need one moment. I mean, after towards the end, just to respond.
Sure. Yeah. So, Ram Prasad ji, can we start with your presentation?
Yeah, I think I think I'm sharing the screen. Is it visible?
Yeah, it's visible. Yes.
Okay, I will not repeat much of what has already been covered by Harsh ji. I think it was a good presentation. But suffice to say, there are some repetitive points. Pardon me for that. But I think the first important point is a contradictory disclosures regarding accounting framework. We already debated it. Statement of changes in equity not presented. No disclosures regarding property, plant, and equipment. Basic thing like date of incorporation was wrongly given. And I think Harsh made a very important point that there was no ECL model followed, and it was complete lack of disclosure on that. No impairment allowance provided on trade receivables. Cash flows, IndAS disclosure was not given, and 113 disclosures were also not made by the company, and no explanation for investment in shares and non-financial assets classified as stock in trade. And probably there were a couple of points which are very interesting, which I found it quite strange also. Depreciation not being provided as per Schedule 3, and no impairment testing done for property, plant, and equipment. And I think all of us agree that this is something very, very fundamental, and a grave mistake has been made and should have been avoided. But nevertheless, it's a warning sign, as Robin rightly said, and Amarjit ji rightly said that probably there's an aberration, and I hope it is only an aberration for us, but it's a wake-up call for us to do deep dive in audits, whatever we do. So this is a little about this. Prabhu, still since already in-depth covered by Harsha, I'm moving on to the next presentation.
Ram, can I interject for a minute?
By all means, Nilanjan, yes.
Yeah. So I think I will also take forward, I think what Harsh also mentioned, that for March 22, when the financial results have been made available, they have stated that the March 21 numbers have also been restated / revised.
Yes.
Right. So what I was failing to understand is that is this just a change of the comparative figure, or is it that I am reworking my financial statements of respective years? Right. So what I want to highlight, and maybe where I want to have some inputs maybe from Robin or Sanjeev or from Manoj, is that under the Companies Act, there is a framework that if you are planning to reopen the financial statements, there is a particular method. You go to the NCLT and you obtain those approvals, and then only you can reopen the financial statements. Right now, what I can gather is that what the company has done, that for March 22 financial statements, they have only changed the comparative number for March 21. They have not gone and reopened the financial statements of those respective years. Now, somebody can argue that reopening of financial statements is a option which the management has. It is not a mandatory section, but somewhere when we're talking about the veracity of the error or the pervasiveness of the wrong approach, it somehow questions the entire true and fair view of the financial statements, and then that is exactly a very big trigger where the entity might think of invoking these optional sections and reopening the financial statements of those respective years. So I could not find anything of that sort in the public domain, maybe in the SEBI submissions or maybe in the press media. But in case Harsh or Ram, if you have some other information, happy to hear that.
No, I don't have any additional inputs on this, but the point is very valid. How do you, reopening is a big thing by itself.
Yeah, because only changing the comparative figure of the current year's financial statements and leaving the erroneous financial statements of those years still valid, that I felt may not be the correct way of dealing with the problem.
Absolutely. I think
my understanding is in most cases they don't touch the previous financial statement years. That's what I thought. This is they do. They reclassify and they do a slipshod job and move ahead. Hopefully nobody is going to catch.
No,
today NFRA has come into picture, and therefore now we will have to be careful.
I think, Robin, it has two separate approaches. If I talk about a simple error, let's say I am supposed to recognize a revenue of ₹100, I have not recognized that, right? So then normally through the IndAS route, I would change my comparative and make my comparative correct. I will not look at correcting it in the respective financial statements. But what the companies that also provide, and it is again at the option of the management, that if they believe that the mistake is so huge, which in our case it is, right? Because ultimately we are deviating from the framework itself. I have an option to change the numbers of the individual financial years, right? So I have to go to the NCLT, make a application and make those changes. What I was only trying to highlight is that only through a accounting route, by changing the comparative figure, that may not be the correct way of being more transparent in the front of the regulator or in front of the stakeholders. Yeah. So Archana, that was the only point which I wanted to make. So Ram, please carry on.
Yeah. I think this one, is it visible? The audit quality report, is this visible?
It is visible.
Yeah, okay. This is on the ILFS.
Just a minute. We are waiting for views of Mr. Sushil Agarwal.
Okay. Oh, yes.
Director, very valuable views. Mr. Agarwal, please give your comprehensive views on Prabhu Steel, as well as I would like you to set the tone for ILFS. You have huge experience in groups of top industrial houses and NBFCs also.
Right, Satish. ILF is a well connived and well planned out, and everybody, the management, the directors, and the auditors, they were in connivance and they have done it. Nobody took a step to see what is there. All were looked after very well, and nobody thought about it. Nobody will catch it. Auditors are big. Nobody will question them. It was a very well planned fraud, and everybody knew. But when things went wrong, everybody started jumping on that. That's a basic thing. If we are, I would say from beginning, if we are correct, as they say, there should be some review of the chartered accountants. They should be trained for what are the changes. Test and all is a different story, but there should be regular workshops. Seriously, And what you say, Manoj, is very good. There should be review. There should be discussion. There should be discussion. And ILFS was a different story by itself. Everybody was interested. They were well looked after, and the audit was done. So this was, a very unnatural or a unique case. Everybody kept their eyes shut, but when the matter came very seriously, everybody said, "Oh, this happened." Same thing with that Satyam, DLFS. When things blow up, then everybody starts rising and raising their voice. That's wrong. And audit committee, they have to play a big role in the board. Very, very important. Audit committee itself is for what? To review the accounts. They should know what it is. What is intent? What are the changes? But I don't think nowhere it was raised. I've studied ILFS, I've studied Satyam. Nobody. Not a question. ILFS are big, good people, personalities. But that was his fate. Can't help it. So this is, we have to complete, the CA Institute has to revamp itself. We have to gain respect. Why this NFRA has come up? Because we were not performing well. Why a supervisory body has to come? Just because in America it is there, so we also get it. No, that should not happen. Unfortunately, sorry, we are helpless. Nobody is thinking about it. But we'll become only a training institute. Make whatever say, nothing else. We have got no say. Absolutely no say, Manoj, no say. That's a pity. I've been talking to Western region, I'm talking to institutes. Nothing, sir. 1 year people come and go, forget about it. That's all. I'm sorry to say, but this is the fate of it. We are all a chartered accountants, but this is what is happening.
Very pertinent views, Sushilji, in this backdrop, and what even Robinji was saying, that we need to be, actually identifying, okay, where things are going wrong even before they happen. And in that backdrop, I feel that institute can definitely play a role. I mean, instead of someone SEBI referring it to NFRA, if FRRB plays a role and identifies such issues, or maybe just like various companies have a whistleblower mechanism, if CA Institute itself asks other chartered accountants to indicate to it if there are any aberrations in the listed companies reports, and refer it to them, I think that will be a good idea to have such kind of referrals, and then the institute going and doing its suo moto, and that will show the effectiveness of the institute, as well as before other regulatory bodies take an action. It will show that the institute is aware and institute is doing whatever it can in its hands. So,
Madam, here I will interpret. Whistleblower will not help here. What we require is we should have a joint auditors. We should have joint auditors in listed companies, big ones. That will suffice. That will suffice. Depending only on one chartered accountant is not correct. Let them be a joint auditors. Let there be 3 chartered accountants. If it's a listed company big with 2,000, 3,000 crores, let them have. So there will be views. So there will be collection. Views they will not be missed out. An audit committee has to be strengthened. That is everywhere we are saying we should be strengthened. They should be taught what are the changes coming up, what are the precautions to be taken. I think everybody will agree what I'm saying.
Very, very nice, very forthcoming and frank views. It's really wonderful. Mr. Sushil Agarwal, you have shared it. In fact, I would like to acknowledge Sushil Agarwal has been an independent director on the board of very well-known companies like Reliance Media Broadcast, and yesterday chaired AGM as an independent director, right?
Yes.
Of of a very large financial sector company. And Mr. Sushil Agarwal, you know so many council members very closely, and your views are indeed very valuable and highly appreciated.
Thank you, sir. Thank you. Thank
With
you.
this, we'll do a deep dive into the 390-page report in a very few slides. So there are many people who can't get through deep dive into 390 pages. A very, very short presentation and a few slides, and we'll have more of your views and comments along with the presentation.
This is very good. It's good. I like this. This review should be there.
We look forward to open house interaction by everybody, and particularly Mr. Sanjay Chaudhary, you also. Very, very deep dive into this. Everybody, Mr. Robin Banerjee, Harsh, Anil, everybody who are there would like to share. We'll take everybody's views and questions into consideration.
Thank you, Manojji. I think I'll make it quick and brief, but I got the concepts captured at a very high level. The first point was the firm did challenge the power of NFRA, but then it was overruled, saying that it is given by the Act of Parliament, so there's no problem on that. I think another point which came to be noted by us is that a lot of supporting documentation information which was not supported in audit file and which were given later to NFRA were dismissed by NFRA as an afterthought. I think this is very, very important for the profession. This is a wake-up call. People keep talking of contemporaneous documentation. People talk of, you document as you work, and you give documents later. I think this is a clear sign that the regulator is not going to accept. They expect the file to be in shape when it is handed over to them for review, and it is a duty of every CA to ensure that the file is in shape. No question of waiting after the signature and all. A typical problem faced by the profession, faced by every firm. So these 2 points I wanted to really highlight. And I think Amarjit ji rightly said that an ILFS is question of independence, and I think it was a question of independence which was raised severely by NFRA, saying that the non-audit services fee was significantly higher than the stat audit fee of 2.3 crores, so almost double. So when you are getting that sort of a non-audit fees, NFRA believes that independence is compromised. There is a self-advocacy, there's a bias, and so on and so forth. But that's an issue which we have to be very cautious. The entire investments, I have put it in one-liner, but I want to share a couple of things. They said that there were no verification notes for 80% of the investments. There were no confirmations. There was no independent analysis. There was no reading of the valuation reports, etc. So there were all these comments which were made by NFRA in the report. The value of investments amounting to 12,320 crores not properly verified. Deficiencies in area of valuation experts, impairment, loss evaluation, etc. No independent assessment by the audit firm of such a large account balance. So this was there were severe strictures which were passed by NFRA. I think this is a point which I covered. Also, there was no evidence of the management testing of impairment in each investment. Is there impairment? Do I have the latest balance sheet? What is the business plan of my university entities? Are they having going concern issues? And to add to that, we definitely have to look at the sustainability model today. Is it sustainable business? Will it be generating cash? Will it get back my money? All those very logical tests which probably a CA is expected to do were probably not available. And there was no evidence of management testing, and consequently no evidence of an auditor going through such testing and also giving his views and finally concluding that. Most of the related party transactions were post-facto approval. There were no prior approval. And another very important point which I have already highlighted is that no independent verification of management assumption and assessment regarding impairment of investments. 177 not complied in relation to loans and advances made. Company policies override provisions of Companies Act 2013, which is ultra-wise. Audit firm ignored potential evergreening of loans and rollover of loans under loans and advances. I think this is something, evergreening of loans and rollover is becoming a big topic. And this is not a new practice. I have had a personal instance where I've seen a 450 crore loan given to a group company, which again came back to the main company as settlement, and using that money, the bank loan was settled, and when there was no due confirmation which was obtained, which later grew to be a big fraud by itself, which was identified by us during the course of our audit. So I think those things were ignored by the audit firm. And so this is a very, very serious stricture which was passed against the firm, that independent assumption and verification. Then moving on to things like risk of management override of controls associated with the sanction of loans. I'm sorry about the spelling mistake there. About sanction of loans and advances ignored. Failure to obtain duly approved credit policy. RBI directions related to credit policy were violated. No work paper to support revenue recognition of stated policy. One of the important things I noticed was company accounting policy, revenue recognition, and the accounting standard, the three-way match which has happened, saying that yes, the standard is complied with, the policy is in line with the standard, and yes, the revenue recognition which is there in the books is in line with the stated policy. All the three were not probably in tandem, which has been highlighted by the NFRA people. No analysis of revenue, no evidence of work paper regarding various components of revenue. Non-routine revenue recognized 110 crores, no details were available. Those things I'm sure the firm would have given, but it would have been rejected by NFRA as an afterthought. And the fact that these were not readily available in the work papers when they were made available raises serious questions about the audit per se. And the last one was interest income of 918 crores. One of the lines I picked up in that was no evidence of tracing the income to bank statement, no independent confirmation in certain cases. Professional skepticism was missing in most of the cases. I could pick up this as a very broad observation. Two very important words for us, which I'm sure independent director Mr. Agarwalji will agree, and Mr. Robin also will agree, is application of professional skepticism. The fact that professional skepticism was not applied by us, which consequently leads to erroneous professional judgment, has been highlighted by NFRA, which in my view is a very serious point for us to deliberate, consider, and probably take this forward. Non-compliance with RBI and CSC ND, and consequences of non-compliance not clearly brought out. And the last but not the least, a point highlighted by Agarwalji, that audit committee need to be strengthened. And one of the things, there is a particular standard on communication with those charged with governance. NFRA says that this communication with those charged with governance on non-compliances were not done on a timely basis, and leading to a colossal audit failure. And probably to correlate to our discussions in the morning, probably the profession per se would have failed on the sustainability part of it. A sustainable business which was not there, leading to huge errors, 70%, 80%, whatever you make, whatever be the percentage, leading to lack of credits flowing back into the system. And this is what happens due to an audit failure of a very large exposure. And I know it's a very short presentation, but Manojji requested that I keep it brief and highlight some critical points. And I thought I should leave this now to the forum of enlightened people like Sanjeevji is there, Nilanjan, Manojji, and we can discuss this further. And to my mind, I think independence is very critical. Independence of mind, independence in appearance, both are very, very critical. And with this, I request views, and would like to enlighten myself on various observations for my fellow professionals. Thank you, Manojji. Yeah.
Thank you, Ram
Very, very crisp presentation. Yeah, Archana.
Yeah. Thank you, Ram Prasad ji, for this wonderful presentation. Manojji, you were saying something.
Yeah, very critical issues raised. I would like to have particularly views of all the participants who are there on the critical issues being raised. We know there are people who are working with ILFS group also in the conclave. They are watching every piece of discussion, and it's really excellent. Yeah, Sanjeev, your thoughts, and you are an ethical expert. First, your views from the ethical angle and from future order angle, and on specific deep dive issues.
Yes, I think hats off to Ram putting 300 plus page order in 6 slides and kind of touching on number of points. I think without going into the detail of the so-called lapses which have been reported, and factually, I don't know what is their interpretation and what evidence has been given. I think this report contains a lot of lapses which seems to have been, crept into the work of the auditors. I don't know if it is because of the lack of evidence that those have been kind of highlighted, but the list is too long. List is really too long. That's point number one. Second, I think on the independence, I'm still not clear, Manojji and Ram, that what is it that the regulator wants from an auditing firm? They're saying you, in a way, can't provide any non-assurance services, right? Because certain non-assurance services have been provided valuing about 4 crores or something as compared to the audit fee of about 2 crores. Now, why can't you have the law today to say, well, an auditor will not be allowed to provide any non-assurance services to the audit client and stop this there and then and finish it off? I mean, you can't be allowing it and then saying that the entire non-assurance services has led to the independence being impacted. Draw a line somewhere, at least prospectively. And this is what we have been asking the Institute again, that please clarify what a member is supposed to do. I think this also has to be kept in mind that now the Institute is also saying, let's develop multidisciplinary firms. Now, if I have a firm of chartered accountants, which is a multidisciplinary firm, will I not provide services which are beyond audit? And I think there is a clarity required which way do they want us to go, at least prospectively. You see, we have been providing, Manojji, non-assurance services to our audit clients for the last 50 years, right? After the Companies Act came in, certain services are not permitted. But if everything is going to be a threat on independence, I think come out with a law. For example, ISBA has already said, to your public interest entities, you will not provide any non-assurance services. That's the guidance which is coming from international. I think this law will come up very soon because I think the MCA in one of their committee reports have already made this point that this is what they're moving towards. That's point number 2. And I think last point, which is very critical, which I think would impact the SMPs and the medium to large firms much more, is on the documentation. I think NFRA is saying, where is the documentation for everything? Now, you can have a documentation up to a point for certain material decisions taken. But they are saying, where is the documentation that you discuss these issues with the people who are those people charged with governance? The auditor is saying, well, I discussed with the audit committee. They are saying, well, audit committee is not same as those charged with governance. Where have you discussed it? Show us the documentation. There's a discussion on, your engagement quality control review partner, EQCR. Now, the large 50, 100, 200 firms will have EQCR. But does all the small firms, and small I have highest respect, I'm not saying small is just the size. The quality may be as good or better than a large firm. How many of them will have an EQCR partner for each of their audits? And how many of them will be able to show documentation on the points discussed, debated, and closed by way of a note? So what is coming out, Manojji and Ram, I think is documentation is going to be a very big key in the coming years for us to prove what we have done as our work. And that is where I think, I don't know what all training can be provided by the Institute, but I think a self-training also is required to keep our files properly, our documentation properly. Because the way NFRA is going, I think you will have an order every month coming in, maybe 2 orders coming in, and it will be all on the similar lines, unfortunately, as they are today, what we have seen the last 3 or 4 orders, which will be painting the profession in a way as if, we are defaulting on many areas, which may not be the case. But until unless the documentation proves that, we'll have a bigger challenge is what my worry is, from a distance. And I'll stop here, let others contribute, and then we can, debate and deliberate. But I thought I'll just give you my initial thoughts.
It's a good point. It is not only examination of facts, but keeping proof of examination of facts, that is more important. It is like a doctor examines a patient. and then looking at the diagnosis and suggesting medicine, but he has to keep a proper proof of it. So if he's investigated that he has to prescribe the right medicine, it's a kind of auditing the auditor process has started, because maybe the peer review was a scam. That did not work, you know, the way they have been selected, lobbying and all that. So it's a system, it's abuse of the system. Of course, there are 80% and over would be good, but this kind of malpractices set the trend. In fact, this is such an important order, and the way we are doing it, we are discussing it from the 360 degrees angle, and also a crisp summary, because people take time to see about 380, 390 pages. They will take a month, but it is very important. We should do it within as soon as possible, and we always cover it that week. We would prefer to cover it the same day also, because we have the resources to do it. I know Mr. DR worked whole night preparing the presentation. Harsh also prepared. He communicated with me at 12 o'clock. Are these slides okay? Should we add something more? We said we'll cover markets also. This is very, very important. In fact, I would like to mention, it comes out this ILFS particular order. The key issue is independence. Independence is a part of a mindset. Not
Manoj,
that one of your firms is getting money from a side business. Let them make money. That doesn't curb independence. It's a mindset of the signatory and mindset of the team. Yeah, Robin, Banerjee, you had some important.
Yes, I need to leave, but ILFS gives us much more than this 300 pages. And we as chartered accountants needs to understand that. The concept of the ILFS business was fraudulent from day one. Why am I saying so from day one? What is the business of ILFS? ILFS business is to lend to infrastructure companies, which means you lend long, over 6 to 7 years, from where they were borrowing from NBHCs for 6 months. So they were borrowing short and lending long.
Correct.
And therefore, from day one, it was a fraudulent structure.
Correct.
And we, the CAs or whoever was involved in it, did nothing about it. Today, we are looking at the 300 pages. To me, this is very, very minor issue. What has happened is from day one, they structured it indifferently. They structured it to commit fraud. They structured it to sterilize. And we, the CAs, now need to be aware of such developments in the future. However, what has happened to the CFO? Nothing. Some directors have gone behind bars. 2 of them are inside. Independent directors are all free. The chairman has already died. He has gone out upstairs already. So what has happened? Nothing. Have we learned from this? If we don't learn as a profession, then we are in a fool's paradise. I wanted to say that, sir.
Sir, just one point. How we are going to bother the financial auditor? Because if you are going to add so many reporting, so many things to be seen by a financial auditor, I think we are extending the jurisdiction of auditor beyond the financials. Yes, there may be a number of expectations of all stakeholders from different angles, but as a role of a chartered accountant, financial auditor, because we are our jurisdiction basically thrust upon we are a financial auditor for one financial year. So what many reportings are possible within the short span of time? Why not there will be multiple reporting by different segment wise, different area wise by different people? Why the financial auditor only should be taken for the case of negligence? He has not seen that he has now if there is a model itself is a failure model or maybe some other areas of failure, how is supposed to be now even sustainability? Are we not bothering the financial auditor with much more expectation? We are not looking him as a god. He should know everything and he should see everything. And what is the remuneration? You will say tomorrow, auditor should not accept this assignment. But then how will we leave it? His core function is to audit. And I think here, Sanjeev sir has rightly said, SMPs are taking away from the audits. They are not interested to audit because of so many requirements. And again, the private limited small companies are not able to pay. They are looking the audit from the compliance point only. They are not looking from the valuation point. And if at all, if auditor is going to comment on that, they said, sir, nahi chalega, don't chhod do. And they want somebody to be put thappa only. That's why SMPs are coming out of audits. They are looking for further other areas of practice. They said, hum nahi karenge bhaiya, kya karenge? It is a double sword. यहाँ करेंगे तभी problem, नहीं करेंगे तभी problem. So but took out of the audit function. And I think the future is that there will be vertical split in the entire profession. There are few only companies, firms will be doing the audits, and all other maybe semi or maybe small practitioners will take away themselves from the audit function. There will be a lot of other many things to earn their livelihoods. And this is a big danger. That's the real point of sustainability of the profession, SMP profession. Yes, sir, please.
Manoj, I'll add a point. Manoj, I'll add a point. Today, the young ones, the young generation, they do not want to do CA.
Just put on your video, no?
Yeah, they don't want to do the CA course. They don't want to enter. They say, why take a headache? See, today we are not doing audit. We are doing compliance. Make a report like Babu, government खाता. सब चीज के लिए रिपोर्ट लिखो. FI लिखते ना, पूरा लिखो. कब गए, क्या पहना, किस टाइम में था वो सब. तो are we supposed to do this, or are we supposed to do the audit? Or do one area, make the documentation, say, I want to check this documentation, rest I have not checked it. Because today we have to close the matter. We have got the deadline. But this is right. Secondly, all from these frauds and scandals, we should learn. This is an eye-opener. ILFS is the best thing. How the multi-layers of companies were there. The planning, since the big boss said, Sanjeev said, is a well planned. I told you all myself, is a well planned. You can't imagine. I said, hats off to him the way they're planned. Who has helped them? Chartered accountants have helped them to create all these multi-layers. So you can't get a track. And what we auditors have short of time relied upon as management reporting, relied on the statement as given to understand. Am I right? These statements are not correct. You cannot do that. But this is what we all are doing. Because there's no time to check. So let's do this. Make a qualification that we have relied upon the statement. No. Yes, everything has to change now. A drastic change. And the youngsters will not come. They will not come. Let me tell you.
I may just add to what Mr. Agarwal is saying, Unmeshji. I think, you see, our one big challenge in our country, and I have the highest respect, as I said, for SMP. You know, when someone looks at me, he looks at me that I'm an ex-Big Four. My first 14 years, my learning was from a small firm, which I'm proud of. You know, wherever I am today, it is because of the initial learning, the initial foundation. I think our difficulty is that we have 54,000 or 60,000 sole proprietors, number one. Nothing against a sole proprietor. You see, if he is happy with what he is doing, who am I to say anything to him? But if we have to get into the audit field, the accounting, the standards, to grow, to look at all the laws, how much can a one person do? So we have to go from one person to maybe a two partners or three partners or four, whatever they want to be. Our challenge is that I am saying, look, I want to do everything. I know everything. My problem is that also at times with a very small percentage, with due respect. And that small percentage creates a bigger problem for the entire profession. You see, our standards have changed. What I did when I passed my CA or till 96, when I did the audit, I had only AS 16, right? After that, AS 16 has become AS 35 or 36. Now, if I don't read, how can I say that I'm in a small place and I don't know about the IndAS and I've still audited a listed company? It is a vicious circle. Things have changed. Times are changing. And Mr. Agarwal has said, I think we have to accept the change, be ahead of it instead of behind it.
Yes, we have to go ahead. Think ahead. Think ahead.
I mean, with highest respect for everyone. I mean,
everyone.
I'm saying this with all humility, you know, that we are a fantastic profession, but somewhere we are responsible for where we are today. Short point. I mean, I don't want to debate this further, but stop here.
It's debatable, but one should learn. That's all. And be
Absolutely.
cautious.
Yeah, absolutely.
As simple as that.
Yeah.
As simple as that.
Absolutely.
Yes, sir. Thank you.
So, Manoj, can I leave? I have to go for a 2 o'clock meeting. Can I leave? Manoj?
Yeah, sure.
Thank you, everybody. Thank you, everybody, Manoj. Thank you for inviting me.
So much.
My pleasure. My
We'll
pleasure.
have you again. We'll have you again and again. Be regular.
It will be my pleasure. It will be my pleasure. Yeah?
Right.
Thank you, everybody. Thank you, everybody.
Thank you.
Thanks, sir. Thank you.
It's our open house. Let anybody share his thoughts on this very vital issues. Put your video on. You can ask your questions in the chat box. You will get answer to every question. Anil, you wanted to speak
Can
something?
I speak? Yeah. Am I audible?
Yeah, Archana, you can.
Am I audible?
Yeah.
Yes, you are audible.
Yeah. Manoj, I think the entire discussion and the entire program today has been a lot of messages and information has been passed on to the professionals. But one thing which I would like to discuss is that, see, the fees of all the professionals are paid by the clients. So there often arises a situation where, and we have the deadlines, as Sanjeev ji said, I think Ram Prasad ji said just now, that we have deadlines to meet. Okay. So sometimes, due to some constraints, some audits may have been done in a hurry. So that could lead to the situation of this recent case where 1 lakh rupees penalty was levied. So considering all these situations, for example, I know I am a small practitioner. So if I get a very small audit, then they want to pay me 15,000 rupees, say, for a private limited company. So my costing is restrained. So compliance part, whether you are doing a mid-size organization or a big-size organization, the compliance more or less remains the same. You have to say that many clauses not applicable. So here the situation arises in case of audits where, say, some auditors want to take an extension, say, for submission of the tax audit report. So there is a certain penalty prescribed for late filing. I think to avoid some situations like this, where TDS reporting has not been done properly and all this, some extensions may be allowed by the department because, see, just like say if I have 10 clients and all of them turn up in the month of September 15th, okay, then definitely I will compromise on the quality of my service. And if I say no to them,
not the compromise of quality doesn't happen that way. Compromise of quality doesn't happen that way.
I agree with you. One thing is which is
a
deliberate.
Man is known for his reputation and his
Consciously
independence
done.
and the quality
I
of work.
agree with you. Something is what is consciously done, means by well within your knowledge. And sometimes you rush up the thing, you may miss on some things. That is what I'm trying to say. So you interrupted me. I had some important point to mention in this context. It's like, I would like to say sometimes, I had issues in the past. I got some audits and doing some, say, things wrong as per law. And I warned them, you correct your way of doing things and keeping your records. So they did not, they've said, no, we can't make the changes. I resigned. And then I find someone, they continue to do the same thing and some other CA signs the balance sheet. So here the question of survival is also there for the small professionals. This is my
I think the CA is expected like a god. He should do everything perfectly within the time, due dates. There is no option for you. Otherwise, you are negligent. That's it. I think that is what the great expectation.
How do I make my payments of my salaries to my staff?
That is your choice. Because you have chosen the profession to practice. CA profession to practice. So you have to deal with the things, plus, minuses, everything. I think there are so many expectations within the time-bound manner. Government is not bothering about your limitation. 12 बजे रात को काम कर रहे हैं, 3 बजे कर रहे हैं,
Incidentally, I raised certain objections in one audit. Then I told them, if you do not correct yourselves, I will resign. Or then the management said, okay, find another chartered accountant. So that was the feedback from the CFO of the organization.
So that's what there is no
factors cumulatively lead to so many situations.
Good afternoon, all. There is lack of unity amongst us only, our professional brothers. They are willing to take up such wrong things which Anilji, you are refusing. There are others who are willing to take up, and that is why all these things are happening.
Yeah. Many audits are done by our colleagues without taking NOC also. Now we have to really take up
that is also wrong.
That is also wrong. But then where is the time and money to fight for all this?
No, sir, I think no. It is not a question of time and money. Just simply you have written one letter to the institute saying, here is a person who accepted the audit without taking no objection. Please take action against him. You see, I think it's a vicious circle, sir. I have a friend who does the audit. Why should I complain against him? Now he gets away with murder. and I keep on
No,
losing my
sir,
voice.
Sanjeevji, I agree with you. I don't dispute your view. That is the correct view and most ethical. Because if I am allowing it, then we are building some courage in our other colleagues to do it next time. You are right.
I think it is nothing like right or wrong, sir. I think all of us are then contributing to this wrong.
Yeah, I agree. It is that's the way it should be. I agree with you. But
I mean, if we
ground
were
reality
strong
is-
in doing it, if the institute was strong in taking action in a timely manner, I'll give you another example.
Yes, sir.
We have this tax audit limits. Digressing, Manojji, for a minute only. We have a limit of 65 tax audits.
Yes.
People like us on this call, all of us follow these limits. There is a person who does 1,000 tax audits.
Yeah. No.
You can't take action against him. There are courts, litigation. I mean, why have these limits then? Forget the limits.
Sir, it is just like some of the politicians today are saying on screen that they will fight on the streets. No. Something similar.
So I think as a regulator, and again, I will not blame the council beyond a point, sir. Not that because I was in the council. Actually, the leaders we elect then run the council, right?
Yes, I agree, sir.
I mean,
I fully agree. Yes,
if we elect the leaders who are not strong to take an action, then all of us get impacted because of that also, no? So I'm not.
Yes, of course.
We may have 10 good leaders, but we need all the 32 elected as to very strong leaders to take the profession forward. They should not be compromised on integrity.
When PM said sahi honi chahiye, only sahi nahi honi chahiye. That is.
Day before yesterday, I have written a letter to the president saying that on 1st July, at least let us give oath of profession of integrity, discipline to every member, along with the elected representatives also. Because now time has come to show to the world at large that we are committed to the profession. I will share the letter to Manojji also. Because now every person is advising to the advisor itself. Not the CL who are the advisor to the public at large. Everybody is advising to us. I think maybe there may be some issues with individuals also, some members also. But in the entire profession is getting tarnished in different ways. There are many people who have been doing with the integrity, with the system, with the discipline. But things are going haywire. And
Unmeshi, I'll tell you just one line. You do a seminar on auditing standards and accounting standards, you'll have 100 people.
Yes.
Or to do it on tax, you'll have 200 people. Do on ethics, you will not even have 10 people attending.
10 people
Nobody wants to listen to ethics.
Nobody.
It's a waste of time.
Waste of time.
But the point is, that is where the profession has suffered. And I think a lot of us have contributed, unfortunately. But I think let's go ahead and on the discussion part on the ILFS order. I think it's nearing 2 o'clock, also time for lunch as well.
Sanjay Chaudhary, well said about ethics. That's why they need to made it mandatory. Even the England and Wales ICAI, EW made ethics question compulsory in their case study. Okay. And but ethics is to be driven down. As we said, it's all about what is in your conscience. That is very, very important. Yeah. Any other thoughts? Any other questions before we wind up? All thoughts are welcome. It's a very, very vital discussion. I would like to mention it has been suggested by many, and there is going to be a special series of presentation with 360-degree deep dive discussions of NFRA orders with the name of the company, the name of the auditor, name of the CFO, audit committees, the date of the order, and this work on presentations has already started, and we'll get many, many more, including some of the latest ones and also from all important sectors, along with discussions by people, board members coming from lots of sectors. Mr. Ram Prasad?
No, I think Manoj.
With the name of the company, name of the auditor, we'll try to review all the orders and do it as a part of the series regularly. So ethics get driven deep down, plus also what is expected from the society, from the professionals, and also the best practices also will come. It will become kind of the good, bad, and ugly part of it.
I think you well said it. I think the most important point, as Sanjeevji rightly mentioned, it is going to be huge focus on documentation, and you need to prove. And I was making a very important mention yesterday in my own, in our own firm's training session. that our document should pass the test of non-chartered accountants, because there are going to be 2 members in the disciplinary committee going forward, and that critical point everybody is missing. To my mind, you have to document and you have to tell them that you have done actually the work. So the standard will be stretched to the maximum extent possible, but unfortunately, if you are going to undertake stat audits of listed companies, you have no choice but to demonstrate that you have done the work, you have tried. And instead of typing, I think we'll have to go back to the old handwritten notes, neatly done, how you are disposing of. I do remember my senior partner, the illustrious Mr. B.R. Vaidiswaran. He used to written of disposed, point, disposed of, discussed, closed, audit evidence, seen like that. He will write in his own handwriting. I think that is the best way to go about now, and close the issues, and do it. And you would also demonstrate to people that you have applied professional skepticism, you have obtained sufficient appropriate audit evidence, and professional judgment has been applied by you correctly. And I think it's a very tall order, but unfortunately or fortunately, there is expectation of the stakeholder community around us. As Robinji rightly said, these multi-layered companies, the fact that there are too many companies, the fact that there are too many related party transactions, huge movement of funds in banks, are all perfect indicators of, in my view, a fraud. So people have to, gear themselves. And my recommendation, Manoj, is definitely our fraternity, our brethren from small towns, or our professional young brothers have to be trained definitely on these topics on a regular basis. And we should definitely ensure that, the risk is covered, and that's probably the only way. And also encourage people to consult. Our hesitation of the weakness of CA profession is that we don't consult much. We have a huge ego problem. We think we know everything. I think we should consult. I still consult. I have no shame in consulting my younger colleagues on technology. I will go and take the report to my younger colleague, ask him to do the disclosures once again. So we have to do repeated consultation. The objective is to ensure that our report should not have any problem. So I think that sort of cultural change, we also have to get it in and help each other. I think it is not that one firm is affected, I'm not going to be affected. I think it is a collective help that we have to render to each other as a fellow professional, which is going to be the only way we can all, meet the stakeholder expectations and grow. Because the opportunities, in my view, are huge. With a 9% growth in GDP, I don't think we should worry about our growth. We should be more worried about the quality of work we do and the money we make.
So that is why, Ramji, I'm Sanjeev Vora here, a chartered accountant. What I have to say is that joint auditors would solve the problem.
Absolutely.
One of the participants had said about it. So joint auditors will definitely solve. So in that case,
Sushil Agarwal mentioned about joint audit, and he is an independent director on many reputed boards. Not only that, in fact, the success of NFRA, a highly respected authority, is being seen factually by many due to the failure of FRRB. Maybe FRRB, there's total paucity of talent. And as Amarjit Chopra had said, FRRB needs, in the earlier sessions, FRRB need to gear up and to see there are much wider coverage. And if there is a series of FRRB order displayed on the website after their due process, one can discuss the FRRB order. But unfortunately, the FRRB, it is total lacking paucity of talent this year. And in some of the earlier years, some of the council members are trying to do some work on that. If we can get a series of FRRB orders, maybe about 200-300 orders in a year, and one can do a deep dive into that, and that can improve the quality substantially. In fact, Sanjeev, you have a great experience in Deloitte also, and as a SME practitioner. The state of quality is such, one of a professional staying in car who is signing negligent, has been totally negligent in signing accounts. He has been going to several POUs, organizing programs and lobbying for how to become on the peer review board so he can join that thing and ensure that such malpractices continue. This is a sad part of it, how people are going. This is a person staying in car. I'm not naming him, but they are lobbying for a peer review. Possibly he'll get a large company or a small company and some established nexus, so they get away with such signing fraudulent accounts, which is a total violation of Section 477A of Indian Penal Code. There is 7 years imprisonment for that. And people are signing such accounts or lobbying for positions and peer review. Kaisa hone ka, he want to know the process. In fact, I mentioned to him, you are signing such accounts. Why you are doing it? Committee bolte aisa sign karo, sign kar diya.
Very good program. Yeah, Manoj, this is a very good program and forum which we are discussing, and many things will come out. And NFRA is doing a very good job, I would rather say. And Deloitte-like firm, no one would have suspected. So that is why when Sushil Agarwalji said it was well planned, I believe him.
Words of wisdom from you, Sanjeev. Both the Sanjeevs, I'll say Sanjeev Chaudhary and Sanjeev Vora, and Mr. Sushil Agarwal is trying a lot to set things right in his own companies. It's very, very challenging for independent directors. Very challenging for independent directors. But some are trying and some are doing it successfully. And it shows it can be done.
Right. Thank you.
So over to you, Archana. Thank you for an excellent discussion and giving us an opportunity, Archana.
Yeah, thank you. Thank you to all the participants for the active participation. Thank you to the presenters, Nilanjan Paul, Ramprasad ji and Harsh ji. Also, big thank you for the expert panelists, Sanjeev ji, Mr. Robin Banerjee, Sanjeev Vora, Unmesh Narvikar, Sushil Agarwal ji for his excellent deliberations and independent directors' views. In case I have missed anyone, Manoj ji, please add.
Archana, you are doing a great job in the profession and in the corporate and banking sector. And very, very high quality work. You are known for high quality work, and keep up the great work. Really. Hats off to you. And all the team members for such a wonderful deep dive 360 degrees review and very, very interactive discussion. Nobody was left out. Nobody was deprived opportunity to raise this bar and raise the standard.
Thank you.
Thank you very much.
Thank you, everyone. Thank you, Nilanjan. Thank you, Sanjeev ji, both the Sanjeevs. Thank you, Manoj and Archana. Thank you so much.
Thank you very much.
Bye.
Thank you. Bye-bye.